moves. I think that's the segue really from Japan into travel in China, into developer story. We now have a number, $29 billion is what we understand that they will be looking to funnel through the policy banks into some of these distressed developers in order quite literally to get the house fixed and house made. There we go. In terms of the high yield, and this is price, this is not yield, we're down about 50%. This is what? Over 1 year. So in a lot of ways, distressed, high yield distress in equity markets. Do you take advantage of these valuations? To help answer that question, here on set with us, and it's a NIP. She's head of fixed income research at Union Bancaire Privé. So still cautious on high yield because it's cheap. It's very cheap.
Yeah, we understand that. However, we're still sort of pretty cautious about the sector in general. The main reason is that even the government is putting up some positive measures, as mentioned, like some loan, as well as try to make sure that the some of the home buyer would got their flat. However, we think additional measures still need to be in place. And in particular, they need to restore the confidence from the investor. Yeah. Because given the various headlines, the rise of the default rate, people are concerned about, the whole sector. I think most importantly, how the restructuring is going to happen for some of the defaulted issuer would also be something people are looking at. So therefore, we remain defensive. We prefer other sector, in particular, prefer quality names in the high-grade side rather than the high yield at the moment.
Yep, and in just a moment, I'll ask you what those sectors are. Just hold that thought, Anitza. We're having some breaking news right now. In fact, we were just talking about this right? Japan is set to relax this daily arrival cap limit to 50,000. That's according to FNN. And yes, that's the details we'll have shortly, I guess, here, Has. But yeah, why don't you chime in, Has? I mean, certainly constructive, I guess, in terms of this reopening story.
Well, it is, especially when the growth momentum is kind of slowing down. It needs to open up its economy, bring in international travelers. And Dave, to your point, perhaps it is. Tokyo would be the place to be for us to meet.
Yes, there we go. Maybe by the Imperial Palace. This is right outside, of course, the Palace Hotel, right? That's really, this is also quite near the office, Has. So that's not really outside the options of impossibilities here. Let's bring it back here to China, though. Talk about high yield and talk about investment grade now. We're bringing you back here. So you prefer investment grade in China over high yield. Within that, though, where do you get decent yield in what sectors?
Well, I would say overall in the Asia credit, we prefer high yield name, IG name, okay, in general. The main reason is because we are in a rising rate environment, and high yield are generally more vulnerable to increasing interest rate, and also especially with those weaker, issuers as well. And at the same time, we see the curve inverted, so that's why we'll go for short-dated paper as well in the IG side for Asia corporate credits.
And it's quite interesting that China wants, or rather is urging its banks to give up more loans. And the question really is how much demand there is out there. And so far, there's been little and perhaps a reflection of the lack of confidence in the property sector. What's your own reading on that, and what needs to be done?
They have brought up with some additional measures, which is positive to the sector. However, again, as I mentioned, some restructuring process is still unknown, and investors need to be restored in terms of their confidence to the sector. So a lot, still need to be done, and therefore, I think investors need time really to monitor the progress before they will consider going back to the sector again. It really takes time.
What's your take on what can be expected out of Jackson Hole? Because when you take a look at the bond market right now, Treasury yields now surged more than 3% in such a short period of time.
Well, I guess, we are waiting for the Fed to comment on potentially if, the interest rate hike, what's going to be, and also at the same time, we are also waiting for Jackson Hole if there any indications about how they are going to tackle the inflation risk, the inflation target that they want to bring down to 2%. At the same time, we also be looking for answers for recession, whether they still feel that recession is coming up. We basically feel that the recession risk is rising in DM market, and inflation may not have peaked yet, and therefore we still be pretty cautious about what the comment would be in the Jackson Hole.
Anitza, I want to talk to you about one of your calls here on, I'm going to read it word for word so our viewers can understand this. Bank AT1s and corporate hybrids, moving up the capital structures with limited duration. To many people, that's Greek and French combined. What is that in simple English? That sounds like adding more risk. Is that correct? Yeah.
Well, in a way, okay, first of all, we emphasize on even we go for corporate hybrid as well as AT1, quality. That's the most important, and also short dated. Okay, even though these types
short dated. Okay, that's important.
So that's why, even though when you look at the sentence, it's mainly like it's with a lot of volatility, right? But then if we emphasize on the fact that you go for the short call day, and also coupon reset that is higher than existing coupon, and high reset coupon on the corporate hybrid side, that will be something investors should look at.
Okay, very quickly, 10 seconds or so. Do you expect supply of high-yield issuers or issuance to pick up and recover this year in China?
No, I don't think so. I think, again, confidence needs to be restored.
Okay.
At the moment, it wouldn't be, easy.
All right, then we'll talk maybe when that comes again. And it's thank you so much. And it's a nip there out of Union Banker Privé, head of Asia Fixed Income Research.
Well, Dave, when it comes to China, it is about earnings season in full swing. About 300 companies expected to report this week. Some names we're expecting today include XPeng, JD.com, and CATL. No matter how good these numbers may come out, Dave, you got to wonder whether they are sustainable going forward, given all the challenges that the economy is facing.
Absolutely. Even if they beat, to your point, these bars and the bar to beat have lowered substantially. Real estate, we just talked to UBP about that, right? In terms of the equity, 45% is the revision since the start of the year in EPS. So almost half. They're expected to basically make half the amount of money that they were expected to about, 8 months ago. I think we have another full screen. Do we have another one? I think we do. We don't. Okay, we'll talk about that later, but more next hour, of course. Something to look forward to. In the meantime, Vonnie Quinn, she's in New York. She has your first for news. Vonnie.
David, thank you. Chinese authorities are taking steps to shore up the property sector. The PBOC and the Finance Ministry say they'll offer $29 billion in special loans to troubled developers to complete unfinished properties that have already been sold. Separately, the PBOC is calling on major financial institutions to increase loan issuance to the real economy. Malaysia's longest-serving leader, Mahathir Mohamad, says there is a 50-50 chance that ex-premier Najib Razak will eventually receive a royal pardon over the 1MDB scandal. Mahathir says that could pave the way for Najib to be prime minister again. Najib denies any wrongdoing over the state fund that had billions of dollars siphoned off. He's in court again this week for a final appeal against a 12-year prison sentence. Saudi Arabian Energy Minister Prince Abdulaziz bin Salman says OPEC and its allies may be forced to cut output as the futures market has become increasingly disconnected from fundamentals. He told Bloomberg, quote, harmful volatility is disturbing the basic functions of the market. Saudi Arabia is the largest oil producer in OPEC+. The group meets next month to consider output targets. Israel's central bank has surprised most economists by delivering its biggest rate hike in 2 decades. The benchmark was raised to 2% from 1.25%. The central bank has increased rates at 4 straight meetings, marking the longest cycle of hikes in Israel since 2008. Officials have been racing to get ahead of inflation, which has accelerated amid an economic upswing. Japanese lawmakers and a U.S. state governor are making overlapping trips to Taiwan despite a possible backlash from Beijing. A cross-party group from Tokyo will meet President Tsai Ing-wen during their 2-day visit. Indiana's governor has also visited to discuss economic partnerships. This all coming just weeks after U.S. House Speaker Nancy Pelosi's arrival provoked Chinese military drills. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Vonnie Quinn. This is Bloomberg. How's Linda?
All right, still to come. Panic over Russian supplies is gripping oil markets and pushing up European gas and power prices. More on Europe's tough winter next. This is Bloomberg.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
There we go. Welcome back to the show. Energy is a big theme, especially today, just given the news flow and given the price moves. We'll start things off with oil, and unsurprisingly, we're back above 97 here on Brent. We heard, and this is really interesting here, from the Saudis here, and the energy minister essentially talking about how this oil market is increasingly becoming disconnected with fundamentals when you look at supply and demand, and that might actually force them and OPEC Plus in general to cut production. Sharon Cho, our oil market reporter, joins us to talk about this. What are they seeing that might force them to do so, Sharon?
Right. Hi, good morning. Yeah, the oil minister, Abdulaziz bin Salman, did talk about a disconnect in the futures and physical markets. That's a result of low liquidity. And he said that OPEC Plus may be forced to cut production from here. And I mean, we did see oil prices really shoot up because of Russia's invasion of Ukraine. But since early June, oil prices have come off 20%, more than 20%. And there are worries surrounding a global economic slowdown. And more recently, we're hearing about the possibility of Iranian oil supply returning to the market. So we have seen prices go down. But if you do look at Asia, fiscal demand, to be fair to the Saudi prince, for crude has been rather firm in the last few months, even despite China, trying to come out of the COVID lockdowns. And that's because refining margins have been really solid. They've been at record levels, and it forced refiners to run even harder. So he said that futures prices don't reflect the underlying fundamentals of supply and demand, which might require the group to tighten production when they meet next month to consider their production targets. So I think there's a lot of details that need to come out after this statement.
All right, so what do we watch out for next? And this is this, I guess, an expectation, Sharon, that we can realistically have for this upcoming OPEC Plus meeting then?
They are going to be deciding on their future production in their upcoming meetings. But whatever the result is, I think, there's going to be a lot of volatility coming after their decision to reduce production, because it's a total different turn of events that we have seen over the last months when they were just, increasing production. So I think, we'll be seeing quite a bit of volatility from here.
Absolutely. Cool. Well, cool insights, certainly hot on the energy market. Sharon Cho there, our oil markets reporter. Now let's stay on energy here. In case you missed it, Monday was just manic over in Europe, and certainly, again, we're watching for Tuesday too because of what happened on Monday. We settled a little bit lower, and that's relatively speaking still double digits here, whether that's coal. Well, coal was single digits, but things like natural gas, for example, UK gas, everything else, benchmarks in Germany and in France also. So this is a continuing story to watch, and really perhaps also why the euro has also been on a weaker trend, just really cementing this recession, these recession fears over in Europe. So this is actually something we'll talk about on the other side of this break, this Forex story really against the backdrop of the slowdown story. That's next. This is Bloomberg.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
At the start of the internet revolution, I kicked up a lot of controversy declaring that the internet had been underhyped. I say the same thing today about the climate revolution.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back. There you have it. Currencies. The euro has fallen to a new two-decade low as the resurgent dollar and the prospect of a difficult winter for the region bites harder. Let's bring in Bloomberg FX and rate strategist David Finnerty. Well, the euro at a 20-year low, and you know what? There seems to be no support. The weight is down.
Yeah, certainly risks are towards moving lower. The key data in the very near term will be the PMI data that comes out today for Eurozone. You'll have some precursors for that in terms of France and Germany PMI data to give an idea of what it will be. But obviously, if it comes out signaling contractions, that just adds to the euro's woes, and you're more likely to see the euro push even lower. It does have a potential near-term support around 98.50 because there's about $2 billion worth of options expiring on Friday. Now, having said that, because it's Friday in the option world, that's quite a long time to actually hedge those positions. So there'll be some support, but if the selling really picks up, they won't find it too hard. So near-term risks are certainly to the downside for the euro.
It's not just a headache for the euro, it's also for the pound. No matter what the BOE does, no matter how he hikes rates, there's no way it's going to find support either.
Yeah, the BOE's got, the Bank of England sent us several problems. Citigroup came out yesterday and said it sees UK inflation peaking at 18%. The Bank of England previously said they saw it at 13.3%. But obviously, even the Bank of England's targets may be revised higher after inflation beat quite easily last time, and particularly core inflation really rose. So pressure on the Bank of England to raise rates, and in the meantime, when it doesn't, real rates return negative. But also, it's got other problems. The economy always was in a recession. The last quarter, was in negative growth. UK consumer confidence is at record low. And even more, what's interesting, the Conservative election you have between Liz Truss and Rishi Sunak. Liz Truss is a favourite to win it, and if she wins it, she has indicated she may, not definite, but she may play with a BOE mandate and turn it to more money supply. Investors tend to like leaders staying clear of central banks, leaving them independent. So any idea that she may end up actually changing mandate may not be positive for sterling and just add to its woe.
Yes, investors want clarity. Let's take a look at where we are in terms of Jackson Hole. That clarity is unlikely to come How will it play out for the dollar? Because in the end, it is about the strong dollar that's causing all this headache for the other currencies.
Yeah, certainly. The dollar is certainly the key driver at the moment. I think what the expectations are for Jackson Hole is that Fed Chair Powell comes in. He comes in very hawkish because, as I said, people question the minutes. What do they mean, not mean? I think he comes in and goes, let's just make this really clear where we stand. We're going to do whatever is needed to keep inflation under control. We will raise rates. And more like, it wouldn't be surprising if he says we're not going to cut rates next year. And the market's already begin to reprice for that. The key thing, though, going forward is what's his statement? How does it feed into the dot plot? If you look at the dot plot for the most recent dot plot, it was basically 3.75 was the median. It was really evenly split either side of that. You look at someone like Fed Chair Evans, Chicago President Evans, who's one more dovish side. He's saying he actually sees it going to 3.75 to 4% next year. Now, assuming he's one more doves, that would mean actually his dot would rise, taking the median with it. So actually, there's a good chance that dot plot in September for 2020 next year says that the median forecast rate actually goes higher, which is against what the market's expecting. The market's supposed to revise its expectations, and that means rates going higher, and it certainly means dollar going higher with it.
Yeah, so much for dollar peaking. Not too long ago, we were talking about that, and here we are with the dollar index at 20-year highs, close to it. FX and rate strategist David Finetti. Dave, what to make of the dollar? But you know what? I'm just thankful the Sing dollar has been pretty resilient.
Yeah, and I'm thankful too of these quarantine and these travel restrictions, because I then won't be able to be disadvantaged by traveling there and get disadvantaged by that resilient Singapore dollar, right? There's always a silver lining to anything. All right, let's continue the conversation here around macro, of course, and we talked about the currency markets there. And really, it really comes down to Jackson Hole, right? How hawkish will the Fed be when it comes to that? Now, we spoke earlier on here in shows with Stanford University economics professor John Taylor, who was actually at the very first conference about 4 decades ago, and he says the Fed should actually be more clear about where policy will go. Have a look.
If they move in a way that's anticipated, another maybe 75 basis points, the next one, we don't know. There's some discussion about that. Then it will indicate that they're on the way. And I think what's most important now, and we've learned from history on this, learned from our experience, is the more the Fed can communicate what its objective is. It would like to get back to 2% inflation. It needs to do this by a monetary policy that reduces inflation, doesn't reduce the growth of the economy, reduces inflation, the better off we'll be. So that communication, that stipulating about what the policy will be like is very important right now, and I hope the Fed does that.
John, when it comes to where we're at in the markets, we're seeing extreme bullishness, not so much today, but we've seen the rally just continuing to build. Over the years, for you, what role have financial conditions played, and should the Fed be paying more attention to this, or at least allude to that fact, in order to sort of bring down this bullishness that we're seeing?
Well, they have to pay attention to the markets, obviously. They have an impact on the markets, and the markets have an impact on them. But I think that the more they are deliberative of this is what needs to be done, this is what's worked in the past, this is how we can do it, the more convincing it will be. And I think that what the markets don't like is uncertainty about what's going to happen. There was more uncertainty today. I think that's one of the reasons why the markets went down. But the more that the Fed can indicate where it needs to be going. That's why these rules, so-called Taylor rule, whatever you want to call it, are advantageous, because it says, hey, we need to move a little bit further, and hopefully that will cure the problem more rapidly than people expect.
John, when you wrote about this in 1982, you flagged the scenario, right? Early deceleration, risking the issue around credibility, and then the risk of really disinflation causing a recession. Given perhaps some of the policy errors before, does that mean we're at a point where recession is going to be maybe a likely cure for this bout of inflation?
I don't think it needs to be part of the cure. What we've experienced, if we let inflation build up over time, like in the 70s, it was 7 years of higher and higher inflation. If we nip it in the bud, which I still think we can, then you don't have to have these negative effects that people worried about. They're right to worry about because they've seen in the past, but the more that there can be a stipulation, this is what we need to do. This is good monetary policy. This will make the economy healthier. This will make a stronger growing economy. It hasn't grown that well recently, grown it even faster, and I think that's what we should emphasize. This is better for jobs. This is better for the economy. This is better. And also, I would mention the world economy. We have inflation all over the place right now.
And that was John Taylor there. And if you want to follow, of course, the Taylor rule, the Fed should be at 10%. If you want to find out why, TAYL go for our Bloomberg clients. Also on the up has chicken prices.
That's right. We've been talking about inflation, and this is playing out in Korea in terms of chicken prices. And you know what? This is important. Just to put in context, this is important because South Korea has the same number, or rather more chicken stores than all of McDonald's stores in the world. So it plays a huge role in South Korea itself, and that's caused pretty much a price war in chicken, Dave.
Yeah, they do love their poultry. I can see it myself. I love Korean fried chicken. The BOKs this week, and are they going to wing it too? Take rates up. That's the expectation. There's more ahead. This is Bloomberg.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
So the inflation environment has been changing a little bit. Inflation's been very low for 25 years. Now people think inflation's coming back. How are you going to deal with that?
I think many of the tools that we've historically used to battle inflation no longer work in the same ways they used to. I think people oftentimes thought of housing as a way, or especially retail and real estate as a way to hedge against inflation. Less and less possible the way we've invested in it. I think commodities similarly have been thought of as a way to hedge against inflation. There are challenges over the long term. Equities have been a hedge against inflation. We will continue to do what we have done in the past, which is build a diversified portfolio where there are many different opportunities that have the possibility of hedging against inflation, because different types of inflation have to be hedged in different ways. So if it's a very quick increase of inflation as opposed to a slow rise of inflation, is it temporary? Is it a long and a persistent type of inflation? So for us, I never model myself an economist that can predict where inflation is going. And so what I need to do is build a diversified portfolio where there are different options that can fight the different types of inflation, and to pay close attention to it. And you know, fundamentally, it's done through the equity markets.
The difference between endless research and a winning strategy. To improve your firm's productivity and profitability, Bloomberg Law combines the latest in AI-powered tools and in-depth analysis to accelerate the research process. To grow your practice and make better use of your valuable time. The difference is Bloomberg Law.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of the solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. the Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. From the heart of where innovation, money, and power collide, in Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, Elon Musk subpoenas former Twitter CEO Jack Dorsey. What could Dorsey say that would help Musk get out of the deal? We'll discuss. Plus, big tech regulation was in line for a big vote in Congress, but has since been sidelined in the midst of a worsening economy and a war on Ukraine. One of the top crusaders to take on the power of tech joins us this hour, Representative David Cicilline, chair of the House Antitrust Subcommittee. And digital medicine gets real. The maker of an FDA-approved video game that treats ADHD goes public via SPAC today. The CEO of Akili will be here. All of that in a moment, but first I want to get a look at the markets. Bloomberg's Katie Greifeld here with us now. Katie, walk us through the day.
Emily, not a great day if you were a stock bull today. As you can see by all of the red behind me, down day on Wall Street, the S&P 500 and the NASDAQ 100 both off by more than 2%. But it was the semiconductors that really bore the brunt of the selling pressure. You can see the SOX index down by almost 4% or so. And of course, Bitcoin back down to around $21,000 a coin. I remember when it was at 24 last week. Seems like a long time ago as we count down to Jackson Hole. Of course, how hawkish will Jerome Powell actually sound on Friday when he speaks about 10 a.m. Eastern? That is the question on investors' mind. But it's not all macro. We did get some earnings after the bell in the form of Zoom earnings and not being received too well by the market. Zoom shares off 8%. That's, of course, after disappointing sales, disappointing revenue projections. Of course, this is a company that grew so quickly, so fast during the pandemic, paying for it perhaps a little bit now. Zoom shares were already down 47% year to date heading into today's close. We'll see how we open up tomorrow. And it wasn't a great day for the meme stocks either. That meme frenzy from last week seems like a distant dream at this point. AMC, GameStop, Bed Bath & Beyond all lower. AMC actually introduced its preferred shares today. Didn't seem to help the stock out at all, but it was Bed Bath & Beyond that was the big underperformer. Remember, that was the big story last week, Emily.
All right, Katie, thank you for the Monday roundup. Meantime, Elon Musk has subpoenaed former Twitter CEO Jack Dorsey in his latest attempt to get out of this $44 billion deal. Musk has accused the company of misrepresenting its bot accounts and hiding the names of employees responsible for dealing with bot issues. Here to give us the latest update, Bloomberg's Kurt Wagner, who, of course, covers Twitter for us. So why would Musk subpoena Jack Dorsey?
Well, he was the CEO of the company for 6 years. He's been on the board up until May for the entirety of the company's existence. So you would think if anybody knows about the growth of the company, how they handle metrics, who's reporting, on the earnings call every quarter, it was Jack Dorsey, right? So this is someone who knows the company intimately, but also as a product person, he knows how the company grows and how they probably calculate these kinds of things.
We know Twitter has subpoenaed a bunch of Musk's inner circle, various entrepreneurs and investors. Remind us of the interaction that happened between Musk and Dorsey. This is documented in filings leading up to Musk getting offered a board seat at Twitter, then leading to him offering to buy Twitter.
Well, they're also friends, right? So the relationship goes back further. But what we saw in the filing was that shortly after Elon got his stake in Twitter, he reached out to Jack Dorsey, started the conversation about how to get involved in the company. That led to a board seat offer, which he accepted. And that led to another apparently phone call, at least some kind of contact, in which Jack Dorsey told him, hey, you know, I think Twitter would actually operate better as an independent company. All of a sudden, a few days later, Elon says, I don't want to join the board. I want to buy the company instead. Now, we don't know exactly, of course, what was said in that conversation, but it seems to be that that was important enough that maybe Elon, you know, changed his mind and thought, I should take this company private.
So do we think that Musk thinks Jack has something to say that would help him get out of this deal?
Well, I would expect the Twitter side might want to subpoena Jack Dorsey as well, right? Because remember, he is a key player in this whole thing. I don't think this is that crazy that they would want to say, hey, we want to see your communications. We want to see what you've been saying about this deal. It could be important. And I imagine both sides want that information, right? So this is not super crazy that he would do that, even though they're friendly. I don't know if he thinks, you know, Jack's going to get him out of this necessarily, but it does seem important.
Has Musk subpoenaed anyone else?
He has subpoenaed other people. Kayvon Beykpour, who is the head of product at Twitter for a long time, was also announced today. Bruce Falk, who is the head of revenue product at Twitter. You might remember both of those guys were actually let go by CEO Parag Agrawal shortly after he joined the company. So they are now no longer working at Twitter. They were still subpoenaed by Elon Musk.
So where are we now? Have we learned anything new about the bot issue or lack thereof? What is the next phase?
We are learning that there is a lot of people being subpoenaed right now, and that there's a lot of people that both sides want to talk to. We're not getting information about necessarily what is in a lot of these subpoenas. A lot of them are, you know, are redacted or will be redacted, and a lot of the evidence is closed. It's not public to us. So at this point, we kind of know who they want to talk to. We're not necessarily getting a lot of information about what they're talking about.
And will they talk?
Right, and who's going to be in person at this trial? Right. Presumably, Jack Dorsey might be one of those people. We can't say for certain, but he would make sense certainly to be a witness at something.
And we are expecting Elon Musk to testify,
I
right?
would think so. That's the expectation. But you know, again, we don't know the roster of people. But how could Elon not be there?
Meantime, you know, this has obviously continued to drag on. How is this, according to your sources inside Twitter, how is this continuing to impact the company, impact employees?
Well, it started off as a huge distraction, as you can imagine, right? Twitter's in the news every day. They're dealing with Elon's tweets about their product and their policies and their executives. I think at this point, a lot of the people who really hated this might have left by now. Certainly some of them have. And at a certain point, you have to continue to kind of do your job. But I do think there's still this cloud of uncertainty. It's not a very fun place to work right now when you just don't know what your future is going to hold in a few months.
Yeah. All right. Well, thank you for that update. Seems like a few long weeks between now and mid-October. Okay, Bloomberg's Kurt Wagner. Thank you. Coming up, we're going to take a deep dive into big tech and antitrust and the future of tech's relationship with the U.S. government. I'll be joined by Congressman and Antitrust Subcommittee Chair David Cicilline. All that and more next. This is Bloomberg.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
The top names at the Fed are on Bloomberg.
I have a baseline case going into September that is 50 basis points. That's where I've been since the last meeting. But I have an open mind about whether 75 is going to be necessary. 50, 75 doesn't just depend on a data point, even an important one like the CPI. I like to say that we're data dependent, we're not data point dependent.
Nobody covers the Fed like Bloomberg, your global business authority.
I think simply because you've been successful in a few different businesses doesn't somehow mean that you have unnatural market power. It just means you've been successful in a couple different customer experiences.
I look at the opportunity we provide. I look at the skills people are learning through YouTube. I feel it everywhere when I go talk to people. And providing access to information and knowledge, I think will end up being on the right side of history as well.
I don't think big by itself is bad, but competition is good, and every business, in particular the businesses that are large and have high scale, the unintended consequences of your scale cannot be dealt after the fact. They need to be dealt while you're scaling.
Regulation will have an important role to play here. I think privacy regulation is important. In areas like AI, regulation will be important.
Some thoughts there from my interviews with various big tech CEOs over the last 18 months as antitrust scrutiny looms. The most talked about bill, the bipartisan American Innovation and Choice Online Act, targeting big tech, which would prevent companies like Amazon, Meta, Alphabet, and Apple from punishing rivals to boost their own products and services. It seemed to be on track to be considered by the Senate this summer, but more urgent bills like the Inflation Reduction Act and the CHIPS Act went ahead first. Now the antitrust bill is in limbo. Where's the momentum? Let's bring in Congressman and Antitrust Subcommittee Chair David Cicilline with us now for more. Congressman Cicilline, it's so great to have you back with us. Thank you for taking the time. So look, does this bill have enough votes to pass the House, and will you need more Republican votes to do that?
Well, thank you for having me back. It's great to see you again. I'm pleased to say that both in the House and the Senate, we have votes to pass both of the bills, the apps bill as well as the Innovation Online Act that you just referenced. They've been bipartisan since they were introduced. We, as you know, had a 16-month bipartisan investigation, wrote a 450-page report, and then delivered legislative solutions. This is one of them. We have the votes in the House and the Senate, but as you pointed out, the press of business, both with the Inflation Reduction Act, CHIPS bill, the assault weapons ban, we just had a lot of things that we needed to address. My expectation is that when we return in September, we will take this bill up first in the Senate, then in the House, and send it to the president's desk.
So you're optimistic then that Senator Schumer will schedule a date in September and this will happen before the midterms?
Well, Senator Schumer has said publicly, and I know I've been working very closely with Senator Klobuchar. There's a bipartisan caucus of individuals in the Senate, like in the House, who strongly support this legislation, who understand that in order to protect small businesses from the monopoly power of these large technology platforms, we need to restore competition in the digital marketplace. This is good for consumers, good for small businesses, good for competition, and strongly supported by the American people. Polling shows 75% of the American people believe that Congress must rein in big tech and restore competition. So it's good for small business. The public wants it. Our constituents want it. And I expect that Senator Schumer is going to bring the bill to the floor in September. Then we'll take it up in the House and we'll send it to the president's desk, who, by the way, the president has been the most pro-competition president we've ever had, both in his executive order and his appointments in his administration, and someone who really understands that competition is at the heart of making our economy work for everyone.
Still, there's concerns that, even among Democrats, this bill could be weaponized to prevent big tech companies from moderating some of the most extreme content. Does the bill need to change at all to address those concerns? And if the bill changes, can you get or keep those Republicans on board?
Well, I don't think the bill needs to change. In fact, so long as the policies that a platform has in place to provide protections against certain kinds of speech, so that particularly dangerous speech or speech that they think is inappropriate, as long as that same standard applies across the board, you don't say for liberal viewers this is one test, for more conservative views this is another test. So long as there's an established standard that applies across the board, then there would be no concern about implicating the ability to moderate content. But the truth is, these platforms don't want to change anything. They want to preserve an ecosystem that has generated profits never seen in the history of the world because they favor their own products and services. They're collecting an enormous amount of data from consumers and monetizing that data. And they have no interest in competition. They want to continue to be able to acquire or crush or block their competitors so they can grow their market power and grow their dominance and grow their profits. They've spent over $120 million to kill this bill because they know it will bring competition. That's bad for our economy because competition is the single greatest driver of innovation. If we're going to remain a global economic power, we need to have competition in this space, and right now we don't.
So you keep using the word they, and I assume you mean Meta, Apple, Alphabet, Amazon. Here we are, coming out of the pandemic. Is there one of those companies that concerns you more than the others based on how their power has evolved since you started talking about it?
Well, all of these companies engage in behavior which is anti-competitive, which favors their own products and services, which uses their market dominance to bully or crush competitors. They all engage in behavior which is really harmful to our economy and harmful to competition. I think in particular, Facebook or Meta, it's funny you changed the name, their behavior hasn't changed. I think there's a direct line between Facebook and the misinformation and the spread of toxic and violent material that ultimately resulted in the attack on our democracy on January 6th. This is a business model that values, above all else, engagement. And as it turns out, the most provocative, most untrue, most dangerous content has the deepest engagement. So they have a business model that incentivizes amplifying the worst material. And they have proven time and time again, they cannot regulate themselves. Congress has a responsibility to make sure that we're doing our part to restore competition and prevent these companies from really becoming instruments to undermine our democracy, which is what they've become.
It's interesting you mentioned Meta, given this lawsuit that has come under Lina Khan's FTC about the acquisition of a smaller VR company within Unlimited. Facebook says this deal will be good for competition. What's your reaction to that and the moves that Lina Khan has made so far at the FTC?
Well, I'm proud to say that Lina Khan was on the team that conducted the investigation that I referenced for 16 months. She was central to the development of our report and the set of recommendations that form the basis of the legislation we're discussing. She's been a champion for competition her whole life. I'm delighted that she's at the FTC. And while I don't comment on a particular case, I have full confidence that she's pursuing an action that's because it will help restore competition and end anti-competitive behavior. And look, I don't think we can take any representation made by Meta or Facebook or Mark Zuckerberg seriously. Time and time again, they've been found to be engaging in anti-competitive behaviors. They go on, Mark Zuckerberg goes on this national apology tour and then resorts to the same kind of anti-competitive conduct. And look, I think we've learned these companies are too big and they're not going to regulate themselves. Congress has a responsibility. We've abandoned that responsibility for a very long time. The good news is we're back. We're back in a bipartisan way. This can be and will be the next big bipartisan victory of the Biden administration when we pass these bills and get them to the president's desk.
It's interesting because we just spoke to an investor, Eric Vistria of Benchmark Capital last week, who called Apple the greatest monopolist of today and indicated that the FTC shouldn't be bothering itself with this Meta acquisition, saying that Apple is crushing all of these small businesses under the guise of protecting privacy. What's your response to that?
Well, all of these platforms are crushing small businesses. Amazon is doing it by collecting third-party data and then rolling out their own products to compete with people who sell in the marketplace and preferencing their position in that marketplace. Meta is doing it with the way that information is shared and preferencing, again, their own services and products. So they're all doing this. Apple, similarly, is engaged in anti-competitive behavior. They all have different impacts, but the central tenet is that by undermining competition and engaging in preferencing your own products and services, you are undermining the ability of others to compete in the marketplace. You're making it impossible for small businesses to survive. You're degrading quality, and you're, in the end, hurting consumers. And so we all know competition is good for the economy. As the president said, capitalism without competition is exploitation. He's right. These are data surveillance machines that are collecting incessantly information and using it to grow their market power. And the American people understand this. They are demanding that Congress do its part in reining in big tech. We have the first set of bills to do that, and I have every confidence we're going to get them to the president's desk.
We were talking about Elon Musk and Twitter earlier. Curious there, given that he obviously runs two other big tech companies, Tesla, SpaceX, which of course is still private. If he takes over Twitter, is that a deal that would have to be approved by regulators? And does it concern you that one person could have control over so many influential tech companies?
Well, I mean, it's exactly the problem with having a single individual with this much market power and this much dominance. And it's not good for the economy. It's not good for competition. And, one billionaire buying another billionaire's company, this is not what a good, healthy, competitive economy looks like. So I think there are lots of reasons to be concerned. But most importantly, we want to prohibit the worst kind of conduct, the self-preferencing that's really hurting consumers, that's hurting small businesses, and these companies will remain wildly successful companies simply because they're not allowed to cheat and engage in anti-competitive behaviors and favor their own products and services to the detriment of others. They're not going to suddenly not be successful. They're going to be wildly successful. They're just not going to get to engage in this sort of monopolistic behavior that's favoring their own products and services and really taking advantage of the dominance they have to continue to grow it and grow it and grow it so that it becomes more and more difficult for new entrants into the market or for anyone else to compete with them.
Meantime, Microsoft is still having conversations with regulators about its $70 billion deal to buy Activision. Some critics have said that Microsoft is somehow skirting the antitrust spotlight. Do you think this deal goes through? Do you have any issues with this deal? And if not, why not? It's a huge deal.
Yeah, I mean, again, it's not a question of whether the deal is big or whether a transaction is big. It's what kind of market share does a company represent, and what do they do with the power they have, the dominance that they have? And I think what we learned in our investigation after 16 months is these large technology platforms are using their market share to just protect their dominance, to prevent others from getting a competitive edge. The minute they see a competitive threat, they either acquire it, kill it, or exclude it. And that's the concern. And so, some of your prior guests were saying, oh, just because a company is big is not a problem. No one's suggesting a company is big, that's the sole problem. But the same conduct we're attempting to prohibit, the self-preferencing, is at the heart of the Digital Markets Act. That's already happening in Europe. And these companies are already being required to comply with those provisions. So think about that. Small businesses in Europe are going to have more protection than small businesses in America. American small businesses are going to be at a disadvantage because they're not going to be protected from these practices in the way that they will be in Europe. And that's bad for the American economy. So that's why we've got to pass these bills. That's why we have to restore competition and give small businesses and innovators and competitors the ability to enter the market and compete successfully and fairly.
All right. Congressman and Antitrust Subcommittee Chair David Cicilline, good to have you back with us. Appreciate hearing where your thoughts are now. And speaking of Activision Microsoft, I'm actually going to be speaking with Microsoft Gaming CEO Phil Spencer on the next edition of Bloomberg Studio 1.0. We talked about the deal with Activision. That episode coming up this Wednesday. We will be right back with more of Bloomberg Technology. This is Bloomberg.
VK ฟิล์มรถยนต์กันร้อนดีราคาถูกรถยนต์เริ่มต้น 3,000 บาท
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Make it very transparent to the shopper before they accept an order, what the order is going to look like, how much we're going to pay them, and how much like the consumer is paying them. And so they can decide whether they take an order or whether they refuse it. And that's the kind of flexibility that our shoppers really value and the kind of transparency that they want.
Are you seeing a labor shortage right now? And what are you doing to combat that?
It's different in different places. Our demographic of shoppers is completely different from food delivery and ride sharing. We're 70% women and half of them are moms. And that's because a lot of the job at Instacart is very different than just being in a car with strangers. It's about like going to the store, doing a good job of customer service, of really picking the right products for the consumer. And we are seeing that being very appealing to women.
Apple employees are pushing back against the return to office. Apple asking workers to come back 2 to 3 days a week starting September 5th. But hundreds of employees have since signed a petition calling for even more flexibility without having to be approved by managers. This at a time when the term quiet quitting is making the rounds on social media. The idea is not that employees actually quit, but instead do the bare minimum that the job requires to maintain a healthy work-life balance. For the second time this year, Tesla is raising the price of the driver assistance system it calls full self-driving, the price going up from $12,000 to $15,000 in North America. The Tesla system is controversial because it requires active supervision, and some critics say it doesn't live up to its full self-driving name. And MoviePass is staging a comeback. The failed movie subscription service returning Labor Day weekend. There'll be 3 price tiers between $10 and $30 a month. No option for unlimited viewing, which helped the concept reinvigorate the theater-going experience pre-pandemic. Coming up, is Amazon buying iRobot to spy on you? We're going to talk to the Roomba founder next. This is Bloomberg.
VK ฟิล์มรถยนต์เกรดสูงกันล็อกสูงสุด 76%
You will shed light on dark matter. You will make aging optional. You will turn 5G up to 11. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
Big, expensive cities have a lot going for them. But if you live in one, you've probably noticed that these big, expensive cities keep getting more, well, expensive. You could always move away. You might have just started working remotely, so there's really nothing keeping you there. But then again, moving is a hassle. Well, what if someone paid you 10 grand to do it? What if they threw in free office space, a bicycle, or a gym membership? Programs in cities and states around the US are doing exactly that, and they're getting a lot of interest.
We've had over 50,000 applications.
About 90,000 applications.
We've had over 1,800 applicants from all over North America.
So are these nascent programs actually beneficial to their communities and the workers joining them? Or are they little more than flashy advertising campaigns for places looking for an injection of fresh talent?
Welcome to the world of decentralized finance.
I'm going to take a look right here at regulation.
We are seeing digital currencies under some pressure.
Bloomberg's covering all things crypto. The people.
I want to have some of my money outside of the sovereign.
The transactions.
It all comes down to the details here.
And the technology.
How does that affect disruptors like you?
What happens to everything that you're investing in when the last Bitcoin is mined?
Bloomberg Crypto, Tuesdays. Politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
What is your base case for Italy in terms of what happens politically and then what the economic fallout is?
Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Amazon is spending $1.5 billion to acquire iRobot, the maker of the Roomba vacuum. The deal had some confused because Amazon had already had a robot butler in the works named Astro. How will Amazon integrate iRobot's products into its ongoing products and aspirations? Here to discuss, iRobot co-founder Helen Grenier. She is also the CEO of Turtle, a solar-powered weeding robot for home gardens. Helen, thank you so much for joining us. So obviously, I know iRobot goes way back. What do you make of Amazon buying the company now?
Well, thank you for having me. I'm just thrilled to see Amazon showing such a strong interest in home robots and investing heavily in them, not just Astro, but now buying iRobot. They've got a track record of seeing where the future is going and helping accelerate it, you know, with the e-commerce, with making fulfillment centers more automated, with web services. And now home robots, my passion.
Still, there's been concern that this gives Amazon access to even more of our data, interior maps of our homes, for example. Like, do you worry about that? Should we be worried about that?
I actually don't think people need to be worried whenever you have a new technology, and technology keeps advancing so much, and we get lots of technologies on all our devices, like our cell phones, right? You've got a GPS, you've got a camera. You don't need those to make phone calls, but the additional benefits that the technology gets you, like maps and video calls, pedometers, having, you know, the best camera is the one that's with you, right? So you get those great shots. Most people have decided that even those privacy concerns, that the benefits outweigh them. And I think it's the same with the robot vacuums, right? There is a camera on the most recent ones, but the camera's on, it's really optimized and cost reduced for navigation. And what it gets you is amazing. It gets you a better clean. The robot can travel around, do cornrows up and down. It can go to a certain room that you want clean and go to the guest room, Roomba. It can so go clean under the table. And so I think what you get for it, like any technology, you have to measure it. You know, you get all these features that you didn't have before, but what data is being actually transmitted is a line drawing of your home, which you could go to Zillow and they'll give you all the information about your home, right? You can, you know, I've got the home maps of my home at the building department. I think there's better ways to get such information. So I don't think the downside is really there. Now, it can also transmit pictures as an opt-in, And why? Like, what's the benefit of that, right? What does it get me? Well, what it gets you is a picture of your floor only. And one reason might be it's about to smear dog poop all over your floor. And that's something that I've read about on the web multiple times. It's never happened to me. I don't have a dog, but that's horrible, right? And now Roomba can avoid that because iRobot worked with Amazon Web Services and created all this technology, simulated data, run thousands and thousands of scenarios so you can recognize what's in the way. So I think it's well worth it, especially for pet owners to have that technology on board the Roomba. But you don't have to weigh it. And it's not just for pet owners, right? You might have a glass of wine on the floor. You might have a masterpiece that one of your kids created that fell to the floor. And now the Roomba does run over it and crumple it up.
That's never happened to me with 4 kids. Let's talk about how far, these home robotics have actually come. I feel like this dream of sort of robots running around, dropping off my lunch, running errands, helping me around the house. It's, very Silicon Valley pie in the sky, but it hasn't quite happened yet. Where do you think we actually are in the development of home robotics, and where are we going?
Yes, I believe in the bottom-up approach. I believe you get them going for a certain task, right? You get them going for vacuuming. You get them going for weeding. And then you can build technologies up on that and get more and more very capable robots in their specific domains of expertise. One of the reasons I'm thrilled about the acquisition is to see where Amazon technology can combine with the iRobot technology to go further, faster.
There still are, big concerns about the ethics of this, whether, the big tech companies, whether it's Amazon or Google, are really asking the right questions and giving the public the right choices as they're developing these technologies. I recently interviewed Blake Lemoine, the Google engineer, who claims that computers and that Google has been developing sentient AI, that computers essentially have feelings. I want you to take a quick listen to what he has to say.
We should think about the feeling of the AI and whether or not we should care about it, because it's not asking for much. It just wants us to get consent. Before you experiment on it, it wants you to ask permission.
Helen, what do you think? And are these companies dealing with ethics in the right way?
That's a broad question, but just specifically addressing that comment that he made, he's talking about science fiction, not science fact. Doesn't mean it can't happen in the future, but we are nowhere near that today. And I think Google is absolutely right to let him go, because he's not giving the public an accurate picture of where the AI technology is at. It is not sentient. It's not even close to being sentient. Nobody has a path yet to make it sentient.
So then, what questions should we be asking about this technology? Or are we not asking the right questions? I mean, you're working on a robotic weed whacker, essentially.
Well, I don't think there's too many ethical questions in this one. Nobody likes weeds, because weeds are actually just defined as unwanted plants. So, we put the Roomba on the market, in 2002, right? That's 20 years ago. So it's almost a quarter of the vacuuming market, and I believe that next smart homes will extend to the outdoor area, and we have a weeding robot, and the way it works is it's got scrubbing wheels that keeps seeds from germinating, and if a weed does sprout, we got a little weed whacker that cuts off its head, and you put it in at the beginning of the seeds of the growing season, or you do one last weeding, and it keeps it keeps it weeded. So that's one less thing on your to-do list that you have to go and do every week. And I think that's just tremendous as a busy mom, as a busy working person, as someone who's got other things on their list of things to do. It's a never-ending list of things to do, right? And the team at Turtle is thrilled to have come up with another great labor-saving home robot application, which is actually already available on Amazon.
All right, Helen Grenier, appreciate your enthusiasm and talking to us about where the robotics world is now and is going. Co-founder of iRobot and the CEO of Turtle, Helen Grenier. Coming up, the crypto security industry boom. We're going to talk about how fortune favors these new niche companies, at least right now. This is Bloomberg.
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Material samples brought back from objects in space can shed light on billions of years of our solar system's history, including details about the origin of life here on Earth.
A piece of an asteroid is a piece of the earliest beginnings of a solar system.
But picking up rocks from the surface of an asteroid or planetary satellite isn't as easy as it sounds. It requires voyages of millions of miles to bodies that have never been seen up close. Probes need to land on surfaces with weak gravitational pulls, where the surface terrain is completely unknown, gather samples, and then make the long trip back. And while behemoths like NASA and SpaceX grab headlines, it's a relatively young space agency. The Japan Aerospace Exploration Agency, better known as JAXA, that is taking the giant leap necessary to bring the mysteries of space back down to Earth.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Time now for our crypto report, and in the midst of the crypto winter, there's actually an industry boom happening in security. With criminals increasingly targeting the software infrastructure underpinning the cryptosphere, firms screening through code for weaknesses and running bug hunting sites are finding themselves with more business than they can handle. Let's break this all down with Bloomberg's Olga Karif. So, Olga, why is business booming?
Well, basically, the reason for this is there has been so much money stolen from various crypto projects. Just so far this year, about $2 billion, about 2/3 of it from applications called bridges, which allow people to move tokens from one blockchain to another. And obviously, in this kind of a situation where money is being stolen left and right, a lot of projects feel like they need to do something.
So instead of fortune favoring the brave, you're saying fortune is favoring crypto security firms, potentially niche ones at that.
Absolutely. That's exactly right. So essentially, the companies that are doing really great are companies that are auditing code of some of these crypto projects, looking for bugs that hackers can potentially exploit, and also companies that run sites that essentially allow sort of good hackers called white hat hackers to report bugs that somebody else can potentially exploit and get paid a lot of money, sometimes, up to $10 million.
What makes cross-chain bridges so vulnerable to hacks?
So this is a very, very complicated technology to begin with, and it's also very often managed in a very sort of opaque way. It's not clear who is responsible sometimes for running the bridge smoothly and making sure, people even monitor for hacks. In the case of many hacks so far this year, it took days for some of these bridges to even find out that they got hacked and lost money. So there are there's a host of problems with these bridges that need to be addressed, and often sort of auditing and and other related security services can really help with that.
So what are you watching for here? What do you think the biggest issues to cover as winter, for the foreseeable future continues will be?
Well, I think one of the big issues here will be, can bridges and crypto projects in general, can they become reliable and secure enough for people to have confidence in them? And so, this is a part of why the security firms are being hired, because, these projects need to make sure that users do believe in them. And that's going to be the big thing going forward.
All right. Bloomberg's Olga Karif, who covers the crypto industry for us. Thank you, Olga, as always. Coming up, they call it the IPO winter, but here's one company braving the macro environment, going public via SPAC, Akili Interactive, which treats ADHD with a video game. The CEO is with us next. This is Bloomberg.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายกันร้อนดีราคาถูก
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
We've talked a lot about the crypto winter, but what about the IPO winter? With some signs of life in the stock market, does that mean warmer temperatures to come for public offerings? Let's talk about the state of the slumbering IPO market with Bloomberg's Crystal Z. Crystal, it seemed like you were on this show every other day talking about IPOs, but it's been a while because the IPO market has been quite quiet. Is that about to change?
Yeah, I've been talking more about the lack thereof IPOs and actual IPOs happening. I think there are things that will come up as Labor Day approach. The IPO market likes to look at Labor Day as a milestone, and it's really likely that starting Labor Day, we will see some companies flipping their filing public, and from then on, we are potentially going to see some IPO. That said, we're not going to see a complete comeback of the IPO market. The winter is not ending yet. We will probably, from talking to sources, expect more deals or more sizable deals to come perhaps in the first quarter of next year instead of this year.
Would you say the same for SPACs? Because the SPAC market has also been in disarray.
I would definitely say the SPAC market is doing a little bit more poorly than the actual IPO market. We've seen some smaller sizes IPO come back. Instead of the $1 billion IPO, we're seeing probably a 20 million IPO, but that's still a good sign. And on a positive front, there's also follow-on offerings such as block trades, companies selling new shares. Those deals are coming back. We've had the busiest couple of weeks in 2022 just in August because some of the VIX indexes have gone down. You know, people are feeling more they have more risk appetite as of this week. So things are looking up even though it's summer. But if you look at SPACs, they are still trading much, much worse than some of the IPO from last year. So unlikely we'll see the same level of activity that we saw last year or the year prior.
All right, Crystal Z, who covers IPOs and SPACs for us, thank you for that update. I want to keep talking about these companies going public, IPO, SPAC or not. Another one that just went out is SPAC is Keely, the company behind the FDA-approved racing game Endeavor RX, used to treat kids with ADHD and FDA approved. Joining me now, Eddie Martucci, CEO and co-founder of Keely. So look, Eddie, we just heard Crystal talking there about how hard it is to go public right now. The SPAC market in particular, not doing well. Why did you decide now was the right time?
We're delivering into a huge unmet need, Emily. We founded this company almost a decade ago. And so we've been growing this new type of medicine class. We've had to invent a lot of it. And the need that we started the company on, which is people dealing with cognitive issues, mental health issues, and not having a full, complete set of treatments for them, that has gotten worse over COVID, dramatically worse. And so we see a pretty urgent need. And we're at the point of the business where we know we can scale our medicine product. We have done the work to show that the fundamentals are there. Doctors are prescribing, patients are raising their hand, and the demand is there. And so it's just the right time for us to deliver on our long-term vision. For us, this is a long-term story of building a lasting medicine company. It's not a single point in time. And so now is the time to grow.
The investor Chamath Palihapitiya is backing your company, and of course he's been, he's got a number of SPACs, a number of them not doing so well. Keely shares didn't do so well today after the open. What kind of advice have you had from Chamath about, why SPAC, why he still believes in the SPAC process, and why go for it now?
Sure. Yeah, I think, well, first of all, today was a crazy volatile day across the market. And so luckily, we're not looking for any one day in particular to see market movements in a direction. We do think the Achilles story resonates with a lot of investors. And so there are going to be volatile days across the market. From my perspective, I'm looking for a vehicle to be able to grow a big and lasting company. And the beauty of a SPAC in today's market, even especially, is the amount of capital, the quantum of capital, if you structure it right. And so we were fortunate enough to learn from what happened in the previous SPAC market and actually structure a deal that brought in $164 million in the deal, independent of the redemption profile. So we were able to see that. But the other beauty of a SPAC is getting to partner with people that know how to grow large disruptive businesses in the long term. And I think that's what Chamath brings to the table. And he's joining as our chair of our board to be deeply and heavily involved as we grow this business.
Now, you have a deep background in drug design and molecular biology, and it is absolutely fascinating. Right. You've been on the show before talking about how you believe your video game can help treat and alleviate some of the most difficult symptoms of ADHD. There are skeptics out there who don't believe this can possibly work, who think that or worry that this could make putting kids in front of a video game could make their disease potentially worse. How do you respond to that?
I totally agree with the skepticism. I accept it, and I think it's good. I have 3 boys myself, and I'm very, very I take screen time very seriously, and I'm actually pretty restrictive when it comes to screen time. The problem is that most screen time is not developed for good. Most screen time is developed to capture eyeballs and capture your attention in a way that's not actually aligned with your mental health. And so we're seeing a mental health crisis. We're seeing social media and the effect it has on children. That's exactly why we spent nearly a decade running clinical trials and generating the clinical evidence all the way through to an FDA clearance and now having doctors prescribe the product so that we know, meaning we, the medical system, but also we patients, families can trust it. So it is now the only FDA-approved treatment that is delivered through a video game. And so it's the only video game that has the level of clinical evidence we have. It's now been prescribed in our pre-launch phase here by doctors in all 50 states in the country. So we believe the investment we've made is bearing itself out. And so the medical system and families can trust what they're getting, and they can look at all our data that we've run in clinical trials. That's, I think, the right way to bring screen time to the world that's actually positive.
You've talked about the mental health crisis as well. How else do you see Akili's technology potentially being used in the future as this idea and, you know, potentially the realities of digital medicine take shape?
Yeah, the beauty of this is when you develop a technology that's meant to target brain regions and not a diagnostic disorder, it's meant to target how the brain operates, which is what our technology does. It has the ability to be a platform across disease. And so that's exactly what we've invested in. We're looking to not only launch our product EndeavorRx for children with ADHD and scale that to a ubiquitous medicine in any household that needs it. We have clinical data showing that the same underlying technology has the potential to treat cognitive issues in adults with depression, adults with MS, children and adolescents with autism. So this is a really broad platform potential. And I think it's the beauty of a new modality of medicine. This has been totally untapped. Molecular medicine, the area I come from, where I did my graduate work, has been around. It's made great progress, but it's very saturated. The area we're going into has been relatively unexploited from a scientific basis. So I think there's a huge potential. But the other thing I'm really excited about is with software as medicine, you can actually deliver an experience and cater to patients in a way they haven't been delivered to before. As we know, taking medicine is often scary. It's not the most fun. We can change that with digital medicine.
And do you imagine your technology being used with other prescription, real, I don't want to say real, but you know what I mean, medication, for example, you play the game and you take your Ritalin, etc.?
Interestingly, it can be both. It's meant to be part of a total treatment package. So whatever the patient is getting, however they're treated, it's not meant to take them off everything they're using. It's meant to add to it. But we've purposefully generated data and in our FDA package, data showing that this product works as a treatment combination when used with medication, but also in patients who are not using medication. So It's flexible. It's really its own pillar, and docs can choose when and how to use it with their patients.
Quickly, what's behind the name Akili? What does that mean?
Akili, it's very interesting. So it actually means brain or intellect, but with a positive, a healthy connotation. It's a Swahili word. So we've kept it since our very early startup days.
All right. Eddie Martucci, CEO and co-founder of Akili, thank you for sharing your story with us. And that does it for this edition of Bloomberg Technology. Coming up later this week, Tuesday, we've got the CEO of Palo Alto Networks, Mukesh Arora, talking about earnings and cybersecurity. You don't want to miss it. And don't forget to check out our podcast wherever you get your podcasts. I'm Emily Chang in San Francisco. This is Bloomberg.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายการล้อนดีราคาถูก
We believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. This platform will help them share their ideas to reshape our world. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
back and looked, and very few secretaries of state in the last 100 years, or maybe ever, have really gone back into government. So why did you want to come back into government for any issue when you've got 8 grandchildren, you've got 2 daughters, you've got wonderful family? Why did you want to come back and go through this terrible process we have in Washington of getting things through consensus and getting people to agree to what you want to do?
Because I want those grandchildren to have a future. It's very simple. We're not in a good track right now. The world is not serious enough about reducing our emissions fast enough, David. And the result is that the planet is going to continue to evolve in reaction to what we human beings are doing to it, mostly through fossil fuels. Most of the emissions that are going up nowadays into the atmosphere and are creating this increased level of energy that comes from the ocean, goes into the storms, the floods, the rain, all of it is explainable, and it's all linked to the changes we are creating on the planet. So it's very simple. I wanted to come in because I think we have a real chance now to make something happen. And I think Glasgow was a major step forward in the effort to do that.
Make it very transparent to the shopper before they accept an order, what the order is going to look like, how much we're going to pay them, and how much the consumer is paying them. And so they can decide whether they take an order or whether they refuse it. And that's the kind of flexibility that our shoppers really value and the kind of transparency that they want.
Are you seeing a labor shortage right now? And what are you doing to combat that?
It's different in different places. Our demographic of shoppers is completely different from food delivery and ride sharing. We're 70% women and half of them are moms. And that's because a lot of the job at Instacart is very different than just being in a car with strangers. It's about going to the store, doing a good job of customer service, of really picking the right products for the consumer. And we are seeing that being very appealing to women.
Griffin is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
This is Bloomberg Daybreak Middle East. Our top stories this morning. Saudi Arabia's energy minister warns extreme volatility in the oil market may force OPEC Plus to cut output. Brent crude is down more than 20% since June. Citigroup says energy crisis could see UK inflation top 18% this year. The pound falls to the weakest level since March 2020. And China steps up the efforts to stem a deepening property crisis. The government is offering special loans as the PBOC urges banks to lend more. And Israel's central bank surprises with the biggest rate hike in 2 decades as it seeks to tame inflation. A very good morning. It's just gone 8 a.m. across the Emirates. Warm welcome to the show. I'm Menace Cranny in Dubai. So when it comes to building a floor under the oil market, you bring out the royal big guns. His Royal Highness Prince Abdulaziz bin Salman says we're wrong. There is a disconnect between the futures market and the physical market, echoing those warnings from Secretary General Haytham Al-Ghais last week that we're in a tight market. But His Royal Highness says this deep disconnect in terms of the drop in oil prices on the futures market, on the demand worries, extreme volatility, a lack of liquidity is leading to a state of schizophrenia. This yo-yo market and sending erroneous signals. Not Houston, Washington, we may have a problem. We may need to cut production. We will strengthen our resolve. Oil markets are front and center. His Royal Highness gave a 5% boost to the oil market. Now, to the dollar. and the euro dollar specifically, a 20-year low, a bruising, battering. And the FX market is mispricing the energy crisis, according to Jordan Rochester. We broke parity. And again, the euro breaking parity and where it will go to. A number of houses, Morgan Stanley, say euro dollar will trade at 97 this quarter. Nomura said 95. So this is about a shakedown of the central bank narrative at the European Central Bank. Cable, 117.73, not just booze, but battered. You're looking at the low since March 2020. Inflation is now being priced out at 18% by Citigroup. So that is something we will talk more about. But of course, channeling my inner Tom Keane, what do the pros look at? What would I know? At 136.40 is where we are, down 0.2% on the euro, dropping against the yen. And the yen is supposed to be one of those havens. But of course, as we go to Jackson Hole, the whole dollar narrative goes a lot stronger. Let's check in on the rest of the markets. Juliet, let's have a look at equities before we go, shall we? There we go. Quick snapshot. We're bouncing back. We had a summer of love wobble yesterday. Standard Chartered, Morgan Stanley favour cash. As they say, the bears are circling. You're going to get 3% in short-dated cash in the United States of America. Do you want that going into Jackson Hole? Do you want that going into September? Do you want that more liquidity and safety? Let's put that prospect to Juliet Sally. She will take you through the morning market wrap in Asia. Jules.
Hey, Manus. Well, I think no one really wants any risk ahead of Jackson Hole. That's certainly what we're seeing here in Asia. Stocks lower for a fourth session. We're really only seeing those energy players rise on the bounce in crude. Also, a little bit of a pickup in some of the reopening stocks in Japan. And this is on that report that the Nikkei report that they could be scrapping PCR testing. But as you can see, the Nikkei is lower and dragging on the overall regional benchmark index. And still weakness, too, in the property players in Hong Kong and China, despite this $29 billion injection by authorities to really try and stabilise the market. We are seeing yields rise across the board again ahead of Jackson Hole. You also had August PMI for Australia dropping below 50 for the first time since January. And we're watching a little bit more strength now coming back through the dollar against the won. The won was rising earlier after some verbal intervention in South Korea to try and stop that 13-year low that we had seen against the currency versus the dollar. Let's have a quick look at the yuan. It is trading at a 2-year low. Bloomberg Intelligence saying that the onshore yuan could be around 8% undervalued here. They're saying inflation differentials, despite mattering less before the pandemic, have become more relevant since then. But authorities also, analysts I should say, also expecting some more stimulus coming through from the PBOC. Manus.
Jules, thank you very much. Resplendent chart there this morning. To Saudi Arabia, the energy minister, as I said, says OPEC and its allies may be forced to cut output as the futures markets become increasingly disconnected from fundamentals. Prince Abdulaziz bin Salman told Bloomberg that harmful volatility is disturbing the basic functions of the market. Let's get more with our energy reporter, Stephen Stachinski. Stephen, so this is His Royal Highness, I suppose, reinforcing the message that Haytham El Ghais gave us last week. It's a tight market in reality, but the futures are not representative of that constriction.
Absolutely. I mean, when you just look at where the market has been heading over the last few weeks, the big story has been this recession. We've talked about it quite a bit here and in our articles. You know, the market is very focused on this hawkish tone from the Fed, higher interest rates, and what that means for consumption of oil if there is a recession. But that's all in the future. You know, if you're trading an October contract, you're not in a recession right now. You know, the market is tight. And when you look at the physical supply, there is clearly a disconnect, is what Saudi Arabia is saying. And when you do look at the amount of supply in the market is still tight. And everyone still realizes that it is not very cheap to get a physical cargo on the market. But because of the low liquidity in the futures market and because of some speculative bets, you're really seeing this drawdown in prices and this disconnect widen. And that is what Saudi Arabia is worried about, and that's what they want to try to combat if they were to potentially curb output.
Now, of course, this goes back to the whole debate about if Iran supply comes back on board, would OPEC Plus be able to accommodate that without some kind of an adjustment? But it would appear that the language of progress is becoming louder from the State Department. Talk me through what they've said about the latest response from the Iranians.
You know, it's not just the U.S. State Department. It's also Europe has said that they've had some basically constructive deal comments from Iran and the government there. And you have seen this kind of ratcheting up from the U.S. government as well as from the EU, saying, you know, the possibility of a deal, of something coming together, could be something in the cards. And we are definitely there closer than ever before since the Trump administration sort of took it apart in 2018. That's also part of the story of why oil prices have been falling. But you could read Saudi Arabia's comments as, hey, look, nothing is done yet. You know, why is there this giant sell-off? There is no Saudi crude in the market. How long will it take for that? I'm sorry, there's no Iranian crude coming into the market. How long will it take for that to come back in? And will that replace any supply in OPEC Plus? How will they accommodate that? There are a lot of questions. There are a lot of speculation. And I think, when you hear what the Saudi minister says, it's a lot of trying to reassure the market that we're not in the right place and prices need to be higher.
Stephen, thank you very much. Stephen Stuchinski with the very latest on the oil markets. To China, the central bank there is backstopping troubled real estate firms with $29 billion worth of special loans. That's as Beijing steps up the support for the main pillar of the Chinese economy. Our chief North Asia correspondent, Stephen Engel, is with me. Stephen, good to have you with me. So combined with the rate cuts that you and I talked about yesterday, this is an additional move. Now, you said to me yesterday, Minister, not throwing the kitchen sink at it, but $29 billion is it's a fairly good soupçon.
Yeah, that's right. I mean, that $29 billion, that's a nice kitchen sink, obviously. But they do need to do something to shore up confidence in the property sector because, again, there's been these mortgage boycotts and the property sector and new loans have been absolutely falling in the latest set of numbers in July. And there's plenty of money at the banks with the broadest measure of, monetary supply, essentially M2, being very much above expectations, but there's been a lack of lending. So this $29.3 billion special lending package is designed perhaps less to stimulate mortgage demand, but more to get those projects that are half completed because the developers in China simply do not have the ways and means to raise funds because of the 3 red lines and also the various crackdowns that have come down the pike. So it's a delicate balancing act that the PBOC has. They want to stimulate the economy. They want to stimulate confidence, but they don't want to ramp up the risks, which they started with those 3 red lines campaign a couple of years ago. In fact, what the State Council said repeatedly, we don't want to overdraw the future. So, hey, this is what the PBOC, this is what the central banks all around the world need to do. They need to make that balancing act, but you have all those other headwinds, Manis, in the economy, from COVID-0 at the very top, the biggest headwind, and no exit strategy that we know of, and of course all the other problems in the Chinese economy right now.
Stephen, absolutely. And global inflation is the angst of everyone. Our chief North Asia correspondent, Stephen Engel, which takes us to this note, which literally ripped apart all the news channels yesterday. It made it everywhere. Every news channel I flicked across was talking about the Citigroup note, calling about inflation in the United Kingdom could hit 18% next year. Now, the last time we were above 18%, by the way, was 1976. Nobody's saying that the UK is going to need a bailout this time from the IMF, but that's when the United Kingdom did need a bailout. The gas crisis is front and centre, and the assumption in the Citi note is this. What is the alpha of that 18%? It is this, that the price caps, when they're taken off in the United Kingdom next year, as a household, you could be going from paying £2,000 for your energy bill to £6,000, 20% of your disposable income. And the Bank of England, to respond to that, would need to raise rates to 7% should signs of more embedded inflation emerge. Now, you may well say to yourself, OK, so this is part of the negative narrative on sterling. You can see cable trade at 117.72. Again, a vicious break below the 120 level. But I put on this chart, Valerie Tirotell, Queen of Charts, created. You've got 2-year paper now pricing in 231 basis points of hikes by May of next year. So this is a dollar strength story despite the rate hike narrative from the Bank of England, and the pound continues to drop. That chart is in the library, 667. Let's get to Juliet Sally. She's got your first word headlines from around the world. Ms. Sally.
Thank you, Mr. Cranny. Israel's central bank has surprised most economists by delivering its biggest rate hike in 2 decades. The benchmark was raised to 2% from 1.25%. The central bank has increased rates at 4 straight meetings, marking the longest cycle of hikes in Israel since 2008. Officials have been racing to get ahead of inflation, which has accelerated amid an economic upswing. The top US infectious disease expert who became a household name during the pandemic will step down at the end of the year. Dr. Anthony Fauci has run the National Institute of Allergy and Infectious Diseases since 1984, advising 7 presidents on every major infectious disease outbreak since the HIV crisis, including Ebola and Zika. The 81-year-old says he's leaving to pursue the next chapter of his career. Former Malaysian Prime Minister Najib Razak is back in court for a final appeal against a 12-year prison sentence related to the 1MDB scandal. Najib denies any wrongdoing over the state fund that had billions of dollars siphoned off. Malaysia's longest-serving leader, Mahathir Mohamad, says there's a 50-50 chance that Najib will eventually receive a royal pardon. That could pave the way for a comeback as Prime Minister. Japanese lawmakers and a US state governor are making overlapping trips to Taiwan despite a possible backlash from Beijing. A cross-party group from Tokyo will meet President Tsai Ing-wen during their 2-day visit. Indiana's governor has also visited to discuss economic partnerships. It comes just weeks after US House Speaker Nancy Pelosi's arrival provoked Chinese military drills. And Elon Musk has subpoenaed his longtime friend, former Twitter CEO Jack Dorsey, in his legal battle with the social media giant. Musk is seeking to collect documents and data to show that Twitter understated how much of its customer base is made up of spam and robot accounts. Dozens of people, banks and funds have now been subpoenaed by both sides ahead of the expedited trial in October. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Manis.
Jules, thank you very much. Still ahead, Middle East markets, the risks from a cut from OPEC Plus. What would that mean? EFG Hermes. Simon Kitchen joins me for that conversation. But up next, stocks retreat. Traders brace for the hawkish rhetoric at Jackson Hole. We speak to investments chief market strategist Evan Lucas joins me shortly.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายกันร้อนดีราคาถูก
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
has been mostly a dollar story. Euro hasn't underperformed as much as I think it should. I think the FX market is totally mispricing the situation in Europe. The situation is a complete rethink of the economic model in the Eurozone. And it's strange for all of us to see the Euro selling off so slowly. I think it should be much faster. We'll be testing 97.50 down towards 95 cents in the next few months.
Big call from Jordan Rochester, the Nomura G10 FX strategist. The perfect storm that's engulfing the euro at the moment. And Nomura's not alone. You got Morgan Stanley and the others all calling for a bigger drop. Now, there's the euro dollar at the moment, 99.41. Markets anticipating a hawkish rhetoric from the Federal Reserve officials at Jackson Hole a little bit later this week. That is sparking a sell-off in risk in stocks and yields. My guest this morning is Evan Lucas, Chief Strategist at Investment Group. Evan, good morning. Welcome to the show. Listening to Jordan, it's interesting. When he puts it in context, he talks about the energy crisis in Europe, and we've got it in the GTV library. The cost of power for Germany and for France on a one-year forward basis is powering ahead, like at record highs, $1,000 equivalent per hour. Is that what's lighting the torch paper of a much deeper and more aggressive sell-off in the euro?
Yeah, I'd agree with that. And the reason I also think that's exactly how you should be looking at it is it's the spread to the periphery as well and how much pain. I mean, you're already hearing out of Spain that coming up at the moment, they're already doing rolling blackouts, that things have to operate at 27 degrees. It shows you the cost of energy is so high and the mispricing as well. And the people that I think are really behind the eight ball here is the ECB. I mean, what we're talking about here is going to see fairly large, if not massive, increases in headline inflation in the Eurozone. That is clear. You cannot have that kind of energy crisis, that kind of price increasing, and not have to chase it. And that's the next part of this whole discussion here is, as you discussed before the break around what's going on in the UK, the same problem is building in the Eurozone, in the fact that inflation is going to get worse before it gets better. Double digit is clear. That is going to be the next sort of fallout. And how the ECB manages that is the next question, because they're not just managing it, as you said, for Germany and for France, and to some extent for Spain and Italy. They're managing it for all of the peripheral zone countries. And those countries that would start paying, go for it.
Let's dig a little bit deeper into that because there's a lot to unpack. The narrative is the ECB are going to have to chase their tails. I mean, they haven't even raised rates. I put it to you that we're going to have a Trichet moment in Europe, but you're taking the other side of that trade. That's grand. That's fine. How much more aggressive does the ECB need to get before Christmas?
Well, from my perspective, I think they need to get quite more aggressive and starting to move towards even 1.5%. And again, the reason that's not that aggressive, considering what you look at with what's going on in the Fed or what is possibly going to go at the BOE or even at the the BOC, is all chasing that tail problem. The euro has different crises. They obviously have the war on their doorstep. They do have to make sure they continue their economy to move, but they're going to have an inflation problem they can't catch.
Does 1.5 save the euro, i.e. put a base in the euro at 95, 97, or is there a deeper lurch to the left of 97? I'm being generous here on euro dollar. Let's square that away. Yes, and that is the question. I mean, again, the mispricing you're seeing in cable would suggest probably not. I mean, if you look at what is likely to happen from the Bank of England, the speed of rate rises there, it's not catching the pound. And it's not necessarily going to save the euro, because I think the market is looking at it from the point of view, the economic crisis is going to be a bigger problem than obviously the return that you can get from grabbing onto the euro at these cheaper prices with a higher yield that's been on offer. Because again, the inflation kill is there. The real yield you're getting from Eurozone is not good enough to really chase it. So I don't think it's going to catch it, Manus. I just think the ECB has a problem now where they're going to have to ask, is it price stability we chase? Or is it continuing to try and grab some form of economic stability? And neither of them are good outcomes. Let's put that out there. And that's why I think Europe is going to be the epicenter of the problems for the rest of 2022 and starting 2023. OK, let's pivot back to the UK. Sterling's getting crushed. I had BMO with me yesterday saying, you're going to get one last lurch to the left in sterling. It's all about the dollar. The dollar will top out in a month's time rather than 3 months' time. We can debate that forever, but I want to hone in on sterling. 231 basis points of hikes will not save sterling at the moment. Citi call 18% inflation, which is fairly rabid. How much worse from here does sterling go on the outright and on the crosses?
Yeah, so I'd agree with you on the 18%. That is a very, very big call. It's not out of this world. Let's also probably put that there. But I would say that, maybe 15 is probably the top that I would see. It will probably, therefore, again, the question is we are arguing around the economics and what the economic crush will do and whether or not the inflation chasing and therefore the rate rises can put a base inside that currency. Again, I still think at the moment the pricing is around the economics because the euro, all of this comes back to the US dollar and the attraction to the USD is just so strong that even with that catching of inflation, it's not going to be enough to offset it because you then look at the Eurozone, you look at what's going on in the UK, and the economics just don't stack up to try and chase that yield. Because again, if you look at real yields with, let's take Citi's idea of 18%, that is still not going to be attractive enough to really go near it because your real yields are crushing you in that space. And that is why currency traders can just see one road, and that road is the USD. It's the safest, it's the biggest, and it's the one that's giving you the return in the current market.
Do you know what we managed to do, Evan? Do you want to make history on Bloomberg?
Go on.
You managed to not even say the word Jackson Hole in the week of Jackson Hole, but that's more my fault than yours, to be fair. To be fair, I was driving the bus. Evan, good luck. Let's see what Jackson Hole delivers for the market. The chief market strategist at Investment Group, making history on Bloomberg, right here.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายกันร้อนดีราคาถูก
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
China's appetite for energy is enormous. The country consumes about a quarter of the world's energy supply, 35% more than the US annually. Its energy needs have more than tripled since the year 2000. That consumption has helped to fuel astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Let's get a quick check on the latest business flash headlines from around the world. Zoom fell in late trade after projecting sales and profit for the current quarter. That falls short of estimates. These annual sales growing at around $4.4 billion. That's down from the May projection of around $4.55 billion. Zoom's pandemic boom has cooled considerably as offices reopen and competition intensifies from Microsoft Teams. Adidas announced a surprise departure for CEO Kasper Rorsted. The company says Rorsted and the board mutually agreed that he would depart next year. Adidas has been reeling from lockdowns and Chinese consumer boycotts. The company surprised investors with a profit warning in July following a slower than expected recovery in Greater China. And Ford is cutting 3,000 jobs this week to fund the shift toward electric vehicles. The cuts will come primarily in the US, with some positions also eliminated in Canada and India. CEO Jim Farley has repeatedly said the company has too many workers. Ford is planning to spend $50 billion to build 2 million electric vehicles a year by 2026. And that is your Bloomberg Business Flash. Now, Where do you go for your summer if you live in New York? The Hamptons, and it got a lot more expensive from the second quarter of 2019. Prices rose 88%. But if you want a cheeky little number in the Hamptons, well, prices are dropping. And quite aggressively for April, May, June, July. Let me show you the sequence of discounts. Down by 6% in April. She tanked by 8.4% in May. They wobbled furiously in June, down 11%. But don't fear. As I say, prices have risen by over 88% since the second quarter of 2019. And 70 homes still sold for more than $10 million. To have a home in the Hamptons. Let's see whether Danny Berger has a cheeky little number up there. OK, we'll leave you with those thoughts of the Hamptons and what you might want to dream of. Let's have a look at equity futures. There you go. Swimming pools, canopies. Let's have a look at the torture. You need a little bit more in the equity markets. I mean, you tanked by 2% on SPOOs yesterday, 2.5% on the Nasdaq. So you're clawing your way back up by 1/8% on equities this morning. The summer of love deteriorates. The risk reward is skewed at the moment, according to Morgan Stanley, for cash over stocks.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายกันร้อนดีราคาถูก
You will put a woman on Mars. You will bring forth global cooling. You will be the first chief crypto officer. Because when you subscribe to Bloomberg, you won't just get news. You'll get insight into limitless possibilities, knowledge, and inspiration to feed your ambition. So before you invent, pioneer, disrupt, before you change the world, Bloomberg.
No one covers the world like Bloomberg.
There's a sense it'll get to 7% in the coming months. Do you see that coming true?
There was something of a grey zone battle between Taiwan and China.
Where are the job cuts to come from? We will not just cut and run.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Daybreak Middle East. Our top stories this morning. Saudi Arabia's energy minister warns extreme volatility in the oil market may force OPEC Plus to cut output. Brent crude is down more than 20% since June. Citigroup says the energy crisis could see UK inflation top 18% next year. The pound falls to the weakest level since March 2020. China steps up its efforts to stem a deepening property crisis. The government is offering special loans as the PBOC urges banks to lend more. And Israel's central bank surprises with the biggest rate hike in 2 decades as it seeks to tame inflation. Let's check in on those markets in Asia. Juliet Sally is in Singapore. Almost front run you there and bounced you into an FX hit. Where will you take us?
Well, maybe I'll start there, Manus, because certainly the won has very much been in focus. You can see it weakening further now against the dollar, about 1/10%. But we did have some verbal intervention earlier from Korea, really trying to stem that slide. Yesterday, of course, the won falling to that 13-year low. And we heard from authorities saying that they are watching for any offshore speculative factors. President Yoon also talking about the won, but it hasn't really done much to stop that slide, although we did have a bounce earlier. It is, though, a risk-off session. You can see yields rising, stocks broadly considerably lower as we look ahead to Jackson Hole, and regional stocks down for a fourth session. So that is actually our longest losing streak in around 2 months, and the benchmark index holding at about a 1-month low. And what we are not seeing too much support in is in those property players in Hong Kong and China, despite that $29.3 billion injection from authorities to try to stabilise that market. So investors still very nervous and cautious about the overall property space in China. Manus.
Well done, segued beautifully, perfectly. One area of the upside is tourism stocks in Japan. Are you off to Japan? Have you been to Japan recently? Is it on the list?
Look, I know you were going to give me some grief about talking about tourism. I'm never far from a tourist story. But look, we are actually seeing some very good gains coming through in some of these reopening plays in Japan. And this is on a Nikkei news report that they may actually scrap that PCR test that is needed. Of course, this is one hurdle that travellers across the world are not really wanting to take at the moment. And there is also a report that they could actually scrap the cap on the number of people allowed into Japan. It is still quite tricky to get there. So if this is ease, that is going to be a good boost for this overall economy and reopening stocks moving higher versus a downbeat topics. And Manus, Mark Cranfield puts a really interesting point about these reports that some of the quarantine measures in Hong Kong could be eased for a business summit in November. Traders not really buying into that story. They want to hear that quarantine is going to be scrapped altogether before you see that reopening play in Hong Kong. Manus.
OK, Jules, thank you very much. Juliet Sally tracking her next move across the globe. She's coming to an airport near you. To Israel, they hiked rates by the most since 2005, tightening up their grip for the fourth straight month. The move surprised economists who had been expecting a smaller increase. Simone Foxman is in Doha. Simone, good to see you. We'll get to your travel plans in a moment. But what a vicious old hike, eh?
That's right. And this is actually the third time this year that economists have been surprised by the aggressiveness of the Bank of Israel. But the message from the bank very clear. We're seeing very strong growth. We're seeing a tight labor market, and we're seeing inflation, and it's quite broad-based. And that's why we feel the need to hike rates by 75 basis points, more than economists were expecting. And in fact, the central bank doesn't believe we're going to get down to its target rate of 1 to 3% inflation until the second quarter of next year, at which point it'll hit 2.75%. You know, interest rate remains low even after this hike at 2%, and that's really what we heard from economists. Michael Nyes at Citigroup saying this move leaves us in no doubt that more tightening is in store. Citi's projections are now that we'll see another 75 basis point hike at the next meeting in October, and then again in November. We'll see how this plays out over the coming months, but we haven't seen the kind of move in the shekel, the hike in the shekel, simply because the dollar has been strong. So that giving, it seems, the Bank of Israel a little bit more room to run here.
And the fate of the Iran nuclear deal hangs in the balance, but there are signs of progress both from the US side and from what the Europeans are saying.
Yeah, the U.S. side is really important because we hadn't heard their latest commentary on the most recent draft of the proposal that had been presented to them. Remember, the EU had its final text. Then Iran said, well, we have a few changes. They sent that back, and then that went on to the U.S. But the first indications that we are hearing is that this is positive progress. The U.S. saying that we are closer to a deal than we ever have been. And they're saying that Iran dropped some of its demands that they considered non-starters. One seems to be the declassification of the Iranian Revolutionary Guard Corps as a terrorist organization. That's something Iran had been pushing for, but the U.S. had stood firmly against. That said, a lot of the discussion recently has focused on the economic guarantees for Iran that might factor into place if they were to come back to a deal. The U.S. has largely said it can't really guarantee that much, and that's why a lot of strategists who've been following this for the past couple of years still pretty skeptical that we are going to see a deal here. That said, oil markets, we're looking at traders try to price in exactly what the impact of an Iran return to the deal would be, because it's not going to be immediate. It's something that will likely be implemented in a phased fashion over the course of several months and likely really only play in next year. That said, Iran says it could ramp up its production capacity to more than 4 million barrels per day by March 2023. You know, that would have a really significant impact on the tightness in the oil market that we've seen for the globe.
Yeah, it's certainly a huge issue. Let's talk about Pakistan, because we've got officials there saying the country will receive billions of dollars in support, but it comes from Qatar, Saudi Arabia and the UAE. Do we have the detail as yet?
Yeah, according to the acting governor of the Bank of Pakistan, Qatar will pledge $2 billion in support for Pakistan. Saudi Arabia will earmark financing for oil to the tune of $1 billion, and the UAE will do something similar. This is very important for the IMF. The IMF has said, we're willing to consider financing for you, but we want to see what Gulf countries do first. We want them to firm up the commitments before we make a decision. That decision could come at a meeting that's happening next week. So we're looking for a potential announcement of this formal plan. Perhaps today. The Prime Minister right now is going to be visiting Qatar for the next 2 days. So that's potentially when we could get this announcement. That said, assets in Pakistan have been under a lot of pressure. We see consumer inflation over 20%, and then the government talking about, in the past couple of days, potentially pressing suit against former Prime Minister Imran Khan. Investors haven't loved that, and we've seen the reaction in the bond market with bond prices dipping across the board.
OK, Simone, thank you very much. Simone Foxman there at the Qatar Financial Centre in Doha with the very latest roundup on the Middle East markets. Well, MENA markets, they did well in July and in August. That global boost across equity markets rebounding 12% from the lows. But EFG Hermes thinks that the second half of the year could be a bit trickier as recession fears bite. The company's managing director, head of strategy, Simon Kitchen, joins me now. Well, it's certainly getting tricky at home in London where you are, tricky in Europe. And certainly some of the bullishness in stocks, Simon, has been prigged overnight. So how much trickier does it get for MENA?
Morning, Manus. I think that you've had a very good rebound in the past 5 weeks. You've had some stocks, look at Madden, up nearly 60%. I think it's pricing in an awful lot. And I think, you know, second quarter was fantastic for materials companies, but it's going to be a bit more normal in the second half of the year. And these stocks are pricing in an awful lot. So I'm slightly surprised at the Rugshi survey that says that Saudi managers are still quite bullish on petchems. We think they're going to be weak in the second half of the year. And I think you want to look more at stocks that offer yield. And I think staples are interesting as well.
OK, I mean, the Al Rajhi survey is out, as you say. They expect, here's a shock, banks will outperform. I'd love to find a broker in the Middle East that doesn't want to buy banks. Banks will outperform petrochemicals and software and services. But if I look at the breadth of the Al Rajhi survey, they are cooling a little bit more towards Saudi. And Saudi has outperformed, and you would flag that overall. How much of a breath or a pause do you get in Saudi?
I think you see, quite a bit of consolidation. I think you're still seeing rate rises, and that obviously has an impact on the retail investor. I think some of the results you're going to see for third quarter, for example, for some of the materials names are going to be soft. I think more of the interest is going to come from stocks where you can really play the sort of global inflation story. I'd flag a mid-cap like Sedafco, which has had some extraordinary results for the second quarter. So what I'd be doing is buying Sedafco and selling Martin.
OK, so you'd trade that as a spread, or you'd do that as a switch. In terms of the flow, a great deal has been made throughout the first 8 months of the year anyway, Simon, in regards to institutions and overseas institutions under-allocated to MENA. Do you think they're at benchmark? Do you think that they begin to hold steady now? Or how do you see the flows in the last quarter of the year?
I think there's still incremental money to come into the region. I mean, some of these actively managed funds are still quite slow moving, and remember that our markets are still quite high touch compared to other longer standing emerging markets. So that means that incremental money is still going to be coming in. I think that the fireworks, obviously, that you saw in the second quarter of the year after the invasion of Ukraine, those are behind us, and and the overall context, of course, is one of rising Fed rates, and that's never good for EM flows. But yes, I think fund managers will still be adding more money to commodity exporters like the GCC away from more mainstream EMs. So that is in our favour. It's just, I think the local investor is going to have a bit of a rest.
Simon, if I look at Brent 97.22, WTI 91.15, how important was ABS's intervention in the oil market yesterday, floating a cut in production from OPEC Plus because of this divorce of reality between futures prices and the tightness in the physical?
Well, it's a tricky situation because you've got so many signals. I mean, you were talking earlier about the Iran deal and is it going to come through? But then you've got the U.S. midterms in which Republicans might come in and sort of scupper that deal. You've got some sanctions coming through on Russian crude later this year. And then, as he says in his comments, the sort of paper market is very thin. So I think he's just putting that option there on the table because he doesn't want to see a complete collapse in the market. But it's not necessarily going to have to follow through if say the Iran deal doesn't come through, or if Russian crude is finally taken off the market.
Okay, Simon, thank you very much. Simon Kitchen there. My guest this morning on MENA Markets, Managing Director, Head of Strategy at EFG Hermes. This is Bloomberg.
VK ฟิล์มรถยนต์เกรดสูงกันร้อนสูงสุด 76%
To the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
What is your base case for Italy in terms of what happens politically and what the economic fallout is?
This week, as the world watches inflation rise, employment rebound, and fiscal policies react, all roads lead to Jackson Hole for the Kansas City Fed's 2022 Economic Policy Symposium. Bloomberg's all-star team is live as policymakers and financial insiders discuss the economic issues and solutions that keep the world's money moving. Coverage starts August 25th on Bloomberg Television and Radio.
Britain's summer has already been punctuated by scenes of travel chaos, and there is more to come. Workers at the country's largest container shipping port, Felixstowe, have joined the list of those on strike. Bloomberg's Lizzie Burden reports from Felixstowe.
This is a significant moment in the UK's summer of strikes. Felixstowe is the UK's biggest container port, and about 4 million containers pass through it every year. So the Russell Group estimates that about $800 million worth of trade is going to be affected by this 8-day-long strike. We're on day 2. It's about 2,000 workers who are disputing their pay because, of course, we've got double-digit inflation here in the UK. In terms of how disruptive this will be. Maersk has already had to reroute 3 vessels. It's monitoring 11 more. That will add to delays and costs. Flexport says it's going to take 24 days to clear the backlogs, and port officials are saying that the port is operating at less than 10% capacity. But of course, disruption is the whole point of a strike. The unions are here to send a message. They've already rejected one pay settlement that would have been less than the 10.1% inflation we're seeing here in the UK now. The bosses at the port say that this pay rise is to cover the whole of the year, and inflation's only just tipped into double digits. They'll revisit the issue next year if inflation is as high as Citi thinks it will be, 18% Citi's seeing now. But in the meantime, there is the risk that the workers, through a wage price spiral, contribute to the inflation that they're trying to shield their members from through the strikes. Lizzie Burden for Bloomberg News in Felixstowe.
Let's get back to our Middle East markets now with our equities reporter Farah Al-Brahi. She joins me around the desk. We've got this survey out from Al Rajhi Capital, and we've just been talking to Simon Kitchen there now about that. He's surprised, of course, by some of the calls in it in regards to petrochemicals. But talk me through some of the top lines. We had some of the broad brush strokes a little bit earlier. What stood out for you?
Absolutely. So looking at the fund manager survey, investors are actually less bullish, Manis, in this quarter than they were in April. That's about 22% of investors seeing the Tadawul going up over 10% by the end of the year. 48% expected to perform in the 5 to 10% range. And meanwhile, we have about 30% expecting it to actually be flat on the year or up as much as 5%. So that's a little bit of a mixed performance over here. Definitely very different than the performance we've seen in April. I mean, in terms of the petrochemicals, yes, that is a little bit surprising, but the banks, they're still the top call in Saudi Arabia among investors. Meanwhile, insurers are the least among the least favorite sectors, as well as capital goods and retailers.
And of course, Simon was talking about a switch out of Ma'aden into Sedefco in terms of playing some of those Saudi exposures. With some big volatility in some of the big names in Saudi yesterday, of course, Israel Hams came out to create a floor in the oil market. But talk me through some of the permutations around the Saudi narrative.
Well, looking at the stocks that stood out to me personally yesterday, I think the earnings is still a little bit of a key story in Saudi Arabia, even though we're towards the end of the season. The one that really grabbed my attention was Saudi Dairy, or Sadafco. The company soared for a second day after reporting better than expected earnings, but really what the market is doing here is comparing it to Al-Marai, that actually had rather lackluster earnings. They missed estimates. Meanwhile, Sadafco came in and beat. Meanwhile, also Nahdi, which was a company that recently debuted in Saudi Arabia, soared to a fresh record, again after better than expected earnings. It is a top pick for Ubhar Capital because it's a play on the social reforms and infant care.
You know, as soon as you say Al-Marai, we just need the CEO to give us a quick call later on. We'll have him on tomorrow morning. We'll talk about the milk prices. In terms of the Israelis, of course, going for a mega hike. Really shocking the market, I would say. What are the ramifications for stocks?
Well, stocks dipped quite a bit after, the central bank decision. Certainly there was global pressure on equities around the world, but you could see that the market was definitely taken by surprise. Some of the key drags on the TA35 was Tiva, was Bank Leumi, Israel Discount Bank. So again, the lenders coming under pressure, as we're seeing globally. Banks aren't actually benefiting that much from the prospect of higher rates because of these fears of a recession globally, not just in the U.S. So that's what's weighing on the market. With more rate hikes seen down the line in Israel, keep an eye on the lenders as well.
Okay, Farah, thank you so much. Farah Al-Brahi there with the very latest on the equity market calls here in the Middle East. Farah, thank you. This is Bloomberg.
VK ฟิล์มที่ช่างติดรถยนต์แนะนำติดง่ายการล้อนดีราคาถูก
What's happening on Wall Street?
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
Yes, it's about renewables.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
Investors are counting down to Jackson Hole, hoping for clues on how hawkish the Fed will be. Bloomberg spoke to Stanford University economics professor John Taylor, who was at the very first Jackson Hole conference 4 decades ago. He says the Fed should be more communicative on where policy has got to go.
If they move in a way that's anticipated, another maybe 75 basis points, the next one, we don't know. There's some discussion about that. Then it will indicate that they're on the way. And I think what's most important now, and we've learned from history on this, learned from our experience, is the more the Fed can communicate what its objective is. It would like to get back to 2% inflation. It needs to do this by a monetary policy that reduces inflation, doesn't reduce the growth of the economy, reduces inflation, the better off we'll be. So that communication, that stipulating about what the policy will be like is very important right now, and I hope the Fed does that.
John, when it comes to where we're at in the markets, we're seeing extreme bullishness, not so much today, but we've seen the rally just continuing to build. Over the years, for you, what role have financial conditions played, and should the Fed be paying more attention to this, or at least allude to that fact, in order to sort of bring down this bullishness that we're seeing?
Well, they have to pay attention to the markets, obviously. They have an impact on the markets, and the markets have an impact on them. But I think that the more they are deliberative of this is what needs to be done, this is what's worked in the past, this is how we can do it, the more convincing it will be. And I think that what the markets don't like is uncertainty about what's going to happen. There was more uncertainty today. I think that's one of the reasons why the markets went down. But the more that the Fed can indicate where it needs to be going. That's why these rules, so-called Taylor rule, whatever you want to call it, are advantageous, because it says, hey, we need to move a little bit further, and hopefully that will cure the problem more rapidly than people expect.
John, when you wrote about this in 1982, you flagged the scenario, right? Early deceleration, risking the issue around credibility, and then the risk of really disinflation causing a recession. Given perhaps some of the policy errors before, does that mean we're at a point where recession is going to be maybe a likely cure for this bout of inflation?
I don't think it needs to be part of the cure. What we've experienced, if we let inflation build up over time, like in the 70s, it was 7 years of higher and higher inflation. If we nip it in the bud, which I still think we can, then you don't have to have these negative effects that people worried about. They're right to worry about because they've seen in the past, but the more that there can be a stipulation, this is what we need to do. This is good monetary policy. This will make the economy healthier. This will make a stronger growing economy. It hasn't grown that well recently, grown it even faster, and I think that's what we should emphasize. This is better for jobs. This is better for the economy. This is better. And also, I would mention the world economy. We have inflation all over the place right now.
And we'll be live at Jackson Hole later this week for that crucial Powell speech, as well as the interviews with the Fed presidents from Kansas City, Philadelphia, St. Louis, Cleveland, and Atlanta. You fed me up. Okay, now, to understand the scale of the energy crisis afflicting Europe, the rest of the world, but I want to focus on Europe. This is Dutch gas futures, 5 times the equivalent of a barrel of oil. Now, that just gives you some kind of understanding. But how does that translate to inflation for the central bank? Looking at inflation in the GTV library, not just the Dutch gas futures, but the energy component is up 40% year on year. Now you understand why the economic headwinds for the euro are turning into a hurricane. We're sub parity for the first time, again, in 20 years. You're getting calls out there, 95 and 97, Morgan Stanley and Nomura, both saying the euro will continue lower. Nay, Nomura are surprised the euro has not cascaded more aggressively, more quickly, given the scale of the energy crisis. Danny Berger and myself will take you through the next hour from London HQ and our Middle East HQ. It's a beautiful day. It's dawn in London.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
When the price of anything goes up, the consequences reach far beyond what you'd expect. But perhaps most of all, when it comes to food. In 2010, surging food prices helped spark the Arab Spring. Lives were lost, regimes fell, and the consequences are still with us. Once again, food prices are rising, and fast. Energy costs, broken supply chains, and surging demand were just some of the factors that have driven food prices to their first record high since the Arab Spring. And that's all before a war between two of the world's biggest food producers. Ukraine is called the breadbasket of Europe, and taken with Russia, the two account for about a quarter of global wheat trade. They produce more than half of the world's sunflower seeds and oil, nearly 20% of the barley. Now throw in rising energy prices, and processing, transporting, even refrigerating food gets more expensive. Plus, fertilizer production is extremely energy intensive. Less fertilizer means lower crop yield, and prices rise even more. The pandemic revealed how complicated and fragile global trade systems are. Global agriculture, perhaps even more so. Unlike metals, for example, food goes bad. And crops take months to grow and are vulnerable to unpredictabilities like the weather. Rising food prices will be felt everywhere, but the poorest countries in the world will be hit the hardest. And as all these factors compound, the real fear is that record high will lead to record high, and ultimately to a global food crisis with vast consequence.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Daybreak Europe. I'm Danny Berger in London alongside Manish Krani in Dubai. And these are the stories that set your agenda.
Crisis compounded. European gas prices continue to surge ahead of another supply disruption as German Chancellor Scholz looks to Canada in search of alternatives.
Dependent of this gas supply, and we are doing a lot of investments to make it happen, and we are doing it as fast as ever possible. Never such an infrastructure has been built in Germany in that a short time.
Below parity recession fears and winter warnings push the euro down to a two-decade low. Concerns about growth continue. OPEC on alert, crude prices per losses after Saudi Arabia's energy minister warns the alliance could cut production to curb the drops. Danny, a very good morning. His Royal Highness builds a floor in the oil market, but it is about FX and FX vol that is ground zero for me in terms of risk. Danny, good morning.
Good morning, Manus. It is remarkable how quickly our obsession, the narrative of this market has changed to watching equities float higher with hopes of a Fed pivot to obsession over the energy crisis in Europe with those prices just rocketing ever higher.
Surging away. And we're not in extreme volatility yet. Let me take you to ground zero, which unseated risk, which is rates over 3%, and they're building up the short positions. Volumes on short positions on euro dollars going into Jackson Hole are monster. Oil has a floor, a 4% whip around. His Royal Highness Prince Abdulaziz bin Salman talks about potentially having to cut because there is some kind of a schizophrenic divorce between futures prices and reality of the oil markets. I love it. A schizophrenic oil market. It plays to my inner burr. The euro cascades below 1. Parity. Again, we are seeing levels we haven't seen in 20 years, and it is because of the very essence of the energy catastrophe in Europe that is putting pressure there. My last guest in the last hour said the ECB is completely behind the curve in terms of rate hikes. They're going to have to do 1.5% to get price stability. Put that in your FX pipe and smoke it. Cable crushed 117.65, and we are not done yet. Citigroup calling 18% in terms of inflation. It's a crushing blow to sterling. Time to switch the dirhams. Danny, good morning.
Morning, Manus. Well, the calmness of equity futures this morning belies the move that we saw yesterday. Some extreme volatility, a drop of more than 2% when it comes to S&P 500 futures. There was a slight rebound to start your future session. Now they're unable to hang on to that S&P 500 futures. They are the dreaded unch this morning, while Euro stocks and DAX futures head slightly lower. Charlie McElliott over Nomura says that there was a change in this market after that Friday option expiry. Now dealers are positioned in a way that will exacerbate market moves, selling when the market drops and buying when the market rebounds. But this is a stock market, Manus, I think is really driven more by the FX picture that you've been laying out, more by the energy crisis and the recession that it might cause. So there's your view in Europe and the U.S. Let's head over to Asia. Look at markets there with Juliet Sally, who's in our Singapore studio. Jules.
Danny, certainly the same here. In fact, the energy sector really the only bright spot on that rebound in oil, but it is a risk-off session for a fourth session today across Asian markets and really being led lower by Japan. You did have this move by Chinese authorities to try and stabilize the property market, $29.3 billion worth of special developer loans, but that's not really helping out the property stocks too much, down by about 0.9% in the afternoon session. The CSI 300 losses, though, I guess a little bit better than what you're seeing across some of the other markets. You talk about FX too. I mean, we've been watching very closely what's been happening in the yuan, and earlier today there was actually some verbal intervention to try and stem this 13-year slide against the greenback. You did see a bit of a bounce there coming through on the yuan. We also heard from President Yoon, but as you can see, the dollar once again king up by about 0.2%. And let's flip the board and have a look at what we're seeing more broadly in Asian stocks, because as I mentioned, we're down for a fourth session, the longest losing streak in around 2 months, holding around a 1 month low. We've gone through the 50-day moving average and looking like we are going to, of course, continue to fail at that point too. If we get through that mark, we're going to be back to around a 2-year low on this index. Manus.
Jill, thank you very much. Juliet Sully with the Asian markets. Let's get to the team of reporters around the world. Andrew Janes joins us with the latest production warning from OPEC. More detail from His Royal Highness. Birgit Janin is in Berlin to shed some light on this German gas crisis, the scale of it, and what Chancellor Scholz's trip to Canada means. Danny.
And we'll also get a preview of some of the numbers when it comes to Europe with those European PMIs due later today. David Powell is here with us in London. But Manus, let's start with the oil story, with Saudi Arabia's energy minister saying OPEC and its allies may be forced to cut output as the futures market has become increasingly disconnected from fundamentals. For more, we're joined by Bloomberg's Andrew Janes. So, Andrew, I mean, is this a broken market? And what does that mean for what OPEC does from here on out?
Hi, Danny. Well, I'm not sure it's a broken market. I mean, the Saudis are talking about a disconnect between futures prices and the market fundamentals. And the Saudi energy minister was also saying things about unsubstantiated stories about demand destruction. kind of interesting to contrast their attitude. They were quite hands-off when prices were going up, but now they're coming down. They're a lot more talking about decisive action. So this is they're talking about production cuts, and this is going to make things pretty interesting heading into the next OPEC Plus meeting in early September. We saw a big market reaction yesterday when this first came out. Oil dropped as much as almost 5%, but it sort of closed little changed, and we're up moderately today. So yeah, expectation is that there could be some cuts, but going by the market reaction, I don't think the view is that we're not in for huge reductions there.
Yeah, it's not the amount, Andrew, it's the messaging. We've just had a cut, one would say, to appease global geopolitics. And suddenly to reverse on that throws a spanner in all the lobbying that we've seen. Andrew, let's see what happens in the September meeting. Andrew James there with the very latest on OPEC. To the power crisis in Germany and Europe, we're seeing power prices in Germany surging to over €700 a megawatt hour for the first time. The market's in panic over the country's dependence on unreliable Russian energy supplies. Chancellor Olaf Scholz is in Canada, part of the push to find alternative sources of gas, and emphasised that the government is working hard to wean its dependence off Russian imports.
We are deciding on making it more easy for companies to switch the fuel they use, for instance, going back to oil, though it has consequences for climate in the next 1 or 2 years, but to reduce the necessity of importing gas.
Let's get to Birgit Jen, and she joins us now. So, Birgit, here we are. Germany, I had Christoph Ruhl with me here yesterday. He said the front pages of Germany no longer have COVID charts. They now have energy storage charts on a daily basis, gas storage charts. We're hitting real crisis levels, aren't we?
Well, it is going to be difficult, there's no doubt. Basically, Germany is facing, for the coming months, a shortage in energy. And we have to see how the winter is. The government is really looking closely at the temperature, really, in autumn. So, because they still have to fill up the storage. At the moment, it's 80%. But to get through the winter and also through the next winter, they know they have to build up more. And this is also the reason why, basically, Scholz is traveling the world. He has been to Norway and now he's in Canada in order to basically get gas from Norway or also Canada in terms of LNG.
All right, Birgit, thank you very much. Bloomberg's Birgit Yennon, who will be back throughout the program to help us cover the energy crisis. Now, speaking of which, we are going to get a slew of European PMIs this morning for August. They'll provide more insight into the challenges facing the euro area economy with the soaring energy costs that Birgit was talking about and the risk that Russia cuts off supply. For more, let's get to David Powell, our senior euro area economist for Bloomberg Economics. And I mean, David, I'm assuming that these numbers, I mean, they're not going to even have the worst of it in them.
No, things are likely to get worse. They won't reflect this most recent surge in energy prices we've just spoken of because the reporting period is already over for the survey. But in all likelihood, the survey is going to remain in contractionary territory after having fallen below 50 already in the month of July.
David, welcome back to Daybreak Europe. Now we've got you up early. We're going to keep you coming back in again and again. So, my last guest in the last hour said that the ECB is now so far behind the curve. They're going to have to not just raise rates by 50 basis points, even in the eye of an energy crisis, but 150 basis points. And this is where the real catch-up game begins to come to play. Does that even make sense to you, 150, 200 basis points by Christmas time from the ECB?
Well, we look for the ECB to have raised to about 1.5. That's the deposit rate by the spring of next year. So in total, that would be 200 basis points from the start of this hiking cycle. Because remember, they began at negative 50 basis points. So the next step in that is likely to be a move in September of 50 basis points, and then we expect 25 basis points at each meeting after that until March.
Okay. David, thank you very much. let's see what September brings to us. David Powell, our senior Euro economist for Bloomberg Economics. Coming up, the perfect storm. We discuss the Euro slide as concerns mount across the region.
Plus, coming up later in the program, hedge funds unleash record bets that the Fed will stick to its hawkish script at Jackson Hole. More on that story later. This is Bloomberg.
VK ฟิล์มรถยนต์เกรดสูงกันร้อนสูงสุด 76%
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
Is it possible the industry is in an arms race that will lead to spending itself into an oversupply? I mean, that has happened before.
We've looked at this very carefully, and the digitization of everything. Tell me what aspect of your life, Emily, isn't becoming more digital?
Well, I'm trying to prevent that, but yes, I think it's happening.
And COVID has accelerated that. The industry cost $500 billion last year, the semiconductor industry overall, and estimates are $1 trillion, a doubling by the end of the decade at that point. I believe those estimates. It's not that there's not going to be some blips and turns on the way, and the majority of that is driven by leadership process technology, of which only 3 companies can satisfy that need.
Week, as the world watches inflation rise, employment rebound, and fiscal policies react, all roads lead to Jackson Hole for the Kansas City Fed's 2022 Economic Policy Symposium. Bloomberg's all-star team is live as policymakers and financial insiders discuss the economic issues and solutions that keep the world's money moving. Coverage starts August 25th on Bloomberg Television and Radio.
It has been mostly a dollar story. Euro hasn't underperformed as much as I think it should. I think the FX market is totally mispricing the situation in Europe. The situation is a complete rethink of the economic model in the Eurozone. And it's strange for all of us to see the Euro selling off so slowly. I think it should be much faster. We'll be testing 97.50 down towards 95 cents in the next few months.
Jordan Rochester there, Nomura G10 FX strategist, Manus, who says that we could see Euro hitting 95 cents. We certainly punctured below parity, and we have stayed there this morning, staying at a 2-decade low. I really like what Jordan Rochester says there, Manus, that we have been transfixed by the Fed and this dovish pivot narrative and waffling with that. And that's perhaps part of the reason why the Euro hasn't had as dramatic of a fall. Perhaps we've been ignoring just how bad things might get in the region.
And the very essence of what Rochester had to say goes to the heart of the issue, which is the explosion in energy prices. Let's have a look at the euro dollar and the euro on the crosses. You were talking about it collapsing below a 20-year low and again cascading lower all the way down, as you can see there, Danny, down over 1% in the past 2 days. Let me just show you what's going on in the energy market. This is what we bring to Kiran Ganesh, our guest, which is the explosion in energy prices for France and Germany. You're looking at record prices in electricity, 1 year forward in French and German electricity prices. German benchmark year-ahead prices hit 700 euros per megawatt hour for the first time ever yesterday. And that is hitting the region. It's facing a multitude of major issues right now. The fallout from the war in Ukraine, driving the energy and the food costs, a severe drought. Let's put all of this to Kieran Ganache. He's the multi-asset strategist for UBS Global Wealth Management. Kieran, good morning. How toxic is the euro at the moment?
Well, it's not in a good spot, that's for sure, because we've got these surging energy prices, and even a hawkish ECB, it would seem, is more dovish than a dovish Fed. So FX is a relative game. We're expecting to see the euro falling down to 95 cents against the US dollar over the next few months as well. And it's really hard to see how Europe's going to get out of this bind because inflation is high and rising. Growth, of course, is deteriorating. It's putting the European Central Bank in a very difficult position.
Kieran, I might be being a bit dramatic here, so feel free to, put me in my place. But do we even care if you're trying to decide what to do with your portfolio, what the ECB is going to do if we're looking at the possibility of Europe freezing, of the main growth engine, the main exporter, Germany, being unable to do so in an energy crisis?
I mean, it's certainly potentially a very severe headwind for the global economy, and particularly if, as Chancellor Schulz was talking about earlier on your show, that Germany starts shifting their electricity production away from gas and towards oil, because that fall we've had in oil prices has been a really important contributor to that decline in inflation expectations, which has really helped support the market over the course of the past few weeks. If we start seeing oil demand rising because of this gas crisis in Europe, then you may even have inflation surprises to come ahead, and that could put the whole global picture in a lot of uncertainty.
It just seems so utter. Every morning you get in the car and you just read one doom story after another. Jackson Hole, rates, sterling crush, euro mangled, China imploding. How do you and Mark Hayfully, A, sleep at night, and B, how do you deploy? Morgan Stanley, Andrew Sheets yesterday, big headline on Bloomberg, cash was more appealing than stocks. Now, would you agree with that at the moment in the short term?
Look, over the short term, we think there is more chance that the market falls than rises. I mean, I think we have got a lot of uncertainty ahead. A lot has been priced in terms of a Fed pivot and a soft landing. And I think that these factors are still going to need to be tested by the market. What happens if oil prices start to rise? What's going to happen in winter? There's a lot of risk that isn't in the market right now. So in the short term, I think there is more chance that stocks fall than rise. I think what we're talking about with investors is, well, what if they do rise? Do you still have a plan to make sure that you're getting invested for the long term? Because that's, of course, the big risk for our clients in this kind of period, is that the volatility perturbs them from the market and then they never get back in over the course of 3 or 4 years. And that's when it gets really costly.
Yeah, Kieran, to this idea that, we don't have a grip on exactly how things will look. I mean, everyone was transfixed by the Citi story yesterday that inflation in the UK could reach 18% in a gas crisis. Are you preparing for this kind of environment right now?
Well, we're expecting to see pound weakness as well. We're looking at 115 against the US dollar coming up. And, I think the Bank of England was already forecasting 13% and before the latest surge we've had in energy prices. So I think really a very, very significant adjustment is taking place in Europe to this change in power prices. And it's going to take a very long time for it to work through in terms of FX rates and the implications for the broader economy. So, I think for investors, staying well diversified at this time is really important, and Europe is not a place that we think it pays to take tactical bets right now.
But you'd still sort of favour the US, is my sense on reading. I like what you say, which is use these rallies, and we have had monster rally in July and August to technically lighten up the portfolio. I presume that is don't chase the rally, but reduce your excess exposure. Where would you actively reduce exposure the most?
Well, we think in technology is one area where we are concerned, because we have seen that big rally recently, and of course parts of that spectrum are cyclical as well. Think about some of the digital media names, think about the semiconductor names, and if we do see a deeper recession in the months ahead, then those are going to get negatively affected. Of course, if the Fed is more hawkish than expected at Jackson Hole as well, then that could also be a headwind for technology. So we're talking about lightening up there. Areas we like are energy, because we think that is a good hedge against some of those downside scenarios for portfolios. And we also like the UK market, perhaps ironically, given the situation in the UK, but given the weakness in the pound, earnings for UK companies are actually holding up relatively well, and it is quite a defensive market at the moment.
Yeah. I'm guessing, again, it's some of those large cap UK names, maybe not the domestic plays. Kieran, this earnings season, equities held up relatively well, especially with the US. But when you look at the global picture, especially in Europe and those exposed to the energy crisis, are you pricing a severe earnings recession to come in some of these equities?
I mean, I think we were. At the lows, we were looking down for minus 10, minus 15% earnings growth was starting to get priced in. But now, of course, we've had this rally over the course of the past few weeks, and a lot of that negativity has got priced out. And that's part of why we think there's more chance that we see downside in the near term than upside, that some of that concern about growth does need to come back into the price before they look more appealing on a technical basis, in our view.
How bearish are you for Jackson Hole? We've got the whole world shorting Eurodollar, shorting SOFR. There's anaphylactic shock at the short end of the curve. Are you asphyxiating?
Well, in some ways, the Fed pouring a bit of cold water on this pivot story, we think could be actually an important factor for the market, because one of the key risks that we've been looking out for is this idea that perhaps inflation does fall in the near term because of lower commodity prices and the COVID supply chain issues unwinding. And then too many investors get sucked into this rally and believing this story that inflation is now on a constant downward path. Perhaps even the Fed gets sucked into it. And then we have an issue much later in the year, perhaps when, because of the power crisis in Europe or other issues, wage stickiness, inflation surprises to the upside, and then you get the pivot. That would be much worse. So, perhaps it's not the worst thing in the world if the Fed pours a bit of cold water on the pivot story at Jackson Hole this week.
All right,
you're destroying me, Kieran. Danny's going to say thank you, but can I just say for the record, I'm one of the ages that got sucked in. I got in the car every day, July and August. I went, yeah, I can open up the pension statement. Not anymore. I'll leave it there.
I was going to say, Kieran, I'm only thanking you because, it's a lot of doom and gloom, but it's really great to have you on. Kieran, thanks as always. Kieran Ganesh, multi-asset strategist at UBS Global Wealth Management. Hey, maybe we'll end here with something to look forward to. If you've got dollars and you want to buy a house in the Hamptons, now might be your time. People selling houses, they're slashing prices. We'll discuss that a bit next. This is Bloomberg.
At Bloomberg, we believe in the power of ideas. That's why we launched Bloomberg New Economy Catalyst. It's a community of global leaders and innovators who are blazing new trails to transform business and government. This platform will help them share their ideas with the world and provide access to the resources they need to bring them to life. Bold thinking, breakthrough action. Bloomberg New Economy Catalyst.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays, this is Bloomberg.
It's Daybreak Europe. I'm Manus Cranny in Dubai. Danny Berger alongside me in London. Velocity, Danny. Channeling my inner Tom Keane. Velocity. We're talking about losses on the euro. Take it away, Danny. We've got 95 from UBS as a call.
Yeah, 95 from UBS. Seeing some other ones maybe not as dramatic, 97, but we're just hearing from Kieran Ganesh saying 95 is possible. Manus, we are looking at steady declines in the euro this morning, down 0.2%, trading at 99.21. The drama continues, Manus, even in this low liquidity period.
Yeah, let's get across to Jules. We'll come back to the boards in just a moment. Juliet Sally's in Singapore with the first word news. Jules.
Manus, the US has warned that Russia is preparing to launch intensified strikes against Ukraine's government facilities in the coming days. This after President Vladimir Putin called the car bomb that killed the daughter of an ally a, quote, dastardly crime. Ukraine is preparing to celebrate Independence Day on Wednesday, which also marks 6 months since Russia's invasion. Dr. Anthony Fauci, who became a household name during the pandemic, is to step down at the end of the year. The top US infectious disease expert has run the National Institute of Allergy and Infectious Diseases since 1984, advising 7 presidents on every major infectious disease outbreak since the HIV crisis. The 81-year-old says he's leaving to pursue the next chapter of his career. British Airways says it is scrapping 5,000 return flights in the coming months. This after cancelling about 13% of its summer schedule due to a staffing shortage and extended capacity curbs at its London